Yes, I can.
Can you? And we're here. Hello, everybody. Thanks so much for joining me and sticking through that lovely bit of mime TA that I did before. Hope you really enjoyed it. That's, of course, a French classic. Looking back at time, that was how they used to do all of their technical analysis back in the day. But I'm now joining you in full 3D audio and full Technicolor. Thanks so much for your patience with that one. Let me just reintroduce the show, shall we? You'll have noticed I had the gold chart up there at the start of the show. I was saying not all that glistens is gold. Or is it? Because as you can see on that gold chart, there's 3 big red candles, and there's been 3 big red candles on the Bitcoin chart here as well. And it's not just the Bitcoin pricing that has, of course, been suffering, or just, not just the whole gold and digital gold, so to speak, things that have been suffering. It is actually everything, all of the whole crypto market. It wasn't that scene from that very famous movie where Bitcoin got up and says, I'm not going to do what everybody thinks I'm going to do, and just freak out, and then he left with only Janice in tow behind him, or whatever that secretary was called. In fact, the whole office got right up and went out the door with him as well. We've seen the market cap go from above 1 trillion down to below 1 trillion, and this isn't just like in and around 1 trillion. We're talking it went down to 800 billion or so, knocking 20% off the entire market cap just from that trillion level. And in fact, it'd been up there at like 1.2 before. So it was a massive amount of money in terms of the market cap of all these coins that got knocked off. And as we can see, there's been a lot of, well, there's a lot to talk about, right? There's a lot to talk about. We've got a special guest. Hello to everybody who has joined us. We have our last special guest here, for instance, Trade Spotting. He is, of course, a fantastic gentleman. Thank you so much for joining me here as well. We've got 3000 Trin. We've got Dom Underhill. We've got Al Godeshwa, who was one of the first people to tell me there that there's no sound, you know, along with everybody else. Sunny Boy, K-Doc. We've got Artie Pyle, Glitch Guy 8. I think I'm deaf, he says. Don't worry, it's not you. I was, of course, doing the old mime act there. And we've got Tony Wright throwing in a lol. Now, of course, we've got very special guest coming on here today, and he is among us already. You'll be very familiar with him if you are indeed a Rocky Outcrop tician, because this man is known to all of you, being the host of the Monday discussion that we have in there in the Neverland voice and Neverland text part of the Discord. So you probably are very familiar with him, and he does, of course, needs no introduction, but I'm giving him one anyway. I'd like everybody to say hello to our good friend Tony Wright, who's joining us here, and I'm just going to bring him up on screen now. I don't have, let me just, you know, my Streamlabs skills are leave somewhat something to be desired, I have to admit. But there we have the outline to his thingy. Let me just bring. I'm really messing this up, Tony. Hope you can bear with me. Where's your face? Where's your face? Honest to goodness, have I gone in? There you are. Right, I've got you on the screen, Tony. Thank you so much for joining me. Let's see if people can hear you talking just now. If you wouldn't mind giving everybody a nice shout out and saying hello to all of the wonderful outcropticians out there. Take it away. Let's see if we can hear you.
Hello, everybody.
Oh,
and it's
fantastic.
Nice to really be here with everyone. How's it going? Can we hear each other? Can we go on?
I think so. I think so. We are hearing each other. Do you know what? We have a few other people, and I want to say another shout out to somebody who's joining us here for today's episode. Tony, I can see Glitch Guy 8 is Boozenit's Boy. Do you remember Boozenit's Boy joining us for one of your sessions there a few months ago? I think it was back in October or so. He joined us for a nice live chat. We chatted for quite a while. He is a nice guy. It's good to have you here.
I've got to be honest. That was a lovely introduction, but everybody that's on the Discord is awesome. I really enjoy being there. There doesn't seem to be anybody that's got anything negative to say. Everyone's kind and friendly to each other, and community that you've built up, Rocky, it's just great. There's nothing like it on YouTube. So yeah, really enjoy being part of that, and yeah, and thank you for that introduction. I mean, I just like, you know, there's been smoke blown at me, and yeah, I'll take that all day long. But really, back at you. You've made a massive community. You've helped a lot of people not only make money, but you've also made people stop losing money by teaching and being non-restrictive with your information. So you're very generous and open with your tuition. So you're a top man, and thank you very much for your work. And I guess on behalf of the rest of the practitioners who are in the Discord, so thank you.
Thank you for that. I really do appreciate that. That's really, really wonderful. So, brilliant. Isn't that great? A man of the community himself. And thank you so much as well to everybody. Artie Pyle, we've got joining us here, who had to give up having a jam session along with Jethro Tull's Aqualung when he got the notification. And he's joining us here, giving up on various passions to be a part of this community. And that's what it's like. Everybody who's part of this community is wonderful. We've got the Terex TV as well saying, love your stuff, man. I mean, I really do appreciate it. So that's fantastic. Tony, what do you think? Shall I take a quick look at the charts? I know we were talking about a couple of things in advance of the show in your discussion in the Discord, one of which was, you know, just how did we get here? You know, how did we get here? What's kind of caused this? And then from that point, and I'm happy to discuss that from a technical point of view. Nice to see you, Dom. Good to have you joining us. I'm going to discuss that from a technical point of view, and if anybody in the comments wants to stick in a few sort of fundamental reasons or stuff from outside of the chart specifically, then feel free to do so. But I'll just kind of maybe start off the analysis from that point of view, and then, like we said, actually in the silent intro that I gave, I said that what you were going to do is join us here to take a look at the charts and ask questions and broaden it out so that everybody feels like they've got, so Tony, you're an expert yourself, but you're going to go ahead and ask questions that maybe I might, overlook or take for granted. So don't be afraid to ask any question, no matter how silly it sounds or whatever. And let's make it so that everybody can really understand what's going on. And Tony's been really good at doing that, actually, really since he joined the Discord, and he's very good at communicating messages, which maybe I have kind of maybe just sort of disgorged really quickly onto the show and not noticed between.
You've got a part of the community that are quite new to everything. We've got a part of the community that's really advanced, and you've got to try and make the trade-off whilst speaking, so that you don't lose the attention of people that haven't got a clue what you're saying, and then the other people that know exactly what you're saying, that they kind of switch off. So you got to kind of get this medium ground where you cater for all types of people, and so yeah, that's what I was saying earlier, everybody, to Richard, was perhaps if he's speaking about a topic, and I think that's something that perhaps the newbies or the people that are new to the crypto space might not understand, then it might be something that I could just quickly nip in and say, Richard, Rocky, what was this bit? Can you rewind there and just go over that a little bit or whatever? And I thought that might be quite valuable to some of us. And even the advanced people that know quite a lot about the other technical things that we've spoken about on the Neverland chat, they themselves are not quite sure on the technical analysis stuff. But if you want to speak to them about programmable money or, ERC tokens or different platforms of transferring money, they're amazing at it, but not too sure on technical analysis. So we're all at different levels and at different stages within the crypto space and within the trading industry. So yeah, really looking forward to today. I think it'll be very valuable for everybody.
That's actually, really good point, that. And for instance, I've talked many times on the channel how I don't really look up news, to be perfectly honest. And when I go on and somebody suggests a news article or whatever, then I'm happy to read it, because it's an outcroptician that's suggesting that I read it, and it keeps me more in tune with the overall market than maybe perhaps I otherwise would be, because I myself gave up on watching YouTube videos about news and TA and stuff like that for the most part quite a while ago. So I do find myself kind of drifting away, and then suddenly, of course, Spidey Monkey or somebody else might post something which is really insightful. Mentioning Spidey Monkey, for instance, he spoke quite at length at times about different fundamentals and stuff like that, which I don't know anything about. So anyway, like, I'll just draw a line under the loving, and we'll get on into the to the chart. But just before I do, I want to address one little thing, and that is the to 3,000 trins specifically, buddy. I did a stream on Saturday, right? And you missed it. Fair enough, because I don't usually stream on Saturday. And I wore two jumpers, okay? I wore a polo neck under my main jumper. And what I was planning on doing was I was waiting for you to arrive in the chat, and I was hoping that you would say, "What, no polo neck today? Or bring back the and then I would whip off my jumper, and it was going to be hilarious. Anyway, this is not the joke. This is just a tribute. Okay, cool. Jumping on with the technical analysis, then here we have it. I already kind of introduced what I wanted to talk about, really, in the sense that we've gone down a big chunk. Yes, we have, but we've gone down here towards 30,500 and then managed to find our way back up again. Actually, to be honest with you, I'm not sure if I did that during the mime section of the show at the very start, or if I actually said that out loud. Anyway, we went down to 30,000 and we've come up more than 10% since. And things, in a sense, I've had a very strong recovery from what has been a very, very strong dump down the way. There's a couple of things we can look to for a bit of context on where we are right now in terms of the current movements of things like that. And I just want to bring let me just bring this onto the show. For instance, the time that we saw the prices coming up towards 23,000, 24,000, actually as high as 24,300 or so there. at the 20th of December, then dropped down the way, and then found ourselves recovering after having had a big wick towards the downside. Now, big wicks like this often can spell further downside, but in this instance we saw that that wasn't the case, and of course it was followed up with an engulfing candle over there and giving you that sort of heads up that things might be looking a bit rosier. And looking back as well towards the past, we had the movement from up there at 20,000 or so down towards 16,200, and then another big sort of rejection wick, bringing us back up above the baseline of the Bollinger Band. So that's what we've seen. Whoops, as I accidentally mess up one of my old Fibonacci setups there. So that's something that we've been taking a look at in whatever, that provides a bit of context for us, okay? But here on the big time frames, we can see that there's this little pattern in the background, and it lines up with this orange line here showing us a measured move off of it, and that takes us past a couple of key areas. So I just want to then jump down from the 24-hour down to something like maybe the 4-hour. Maybe the 4-hour even at that is you know, bigger than we need. This here will be good. This is the 1-hour chart, and then there's a couple of things that kind of led to where we are now from a technical only point of view. And I'll not actually go, you know, super complex with this, but I will look back the way a little bit for things like divergence and whatever else, and see if there's anything else giving us an extra sort of sign that things could go a little bit worse than the measured move alone might have suggested. But first off, you know, we had this potential pattern here. Now, this was drawn in as a descending triangle with a couple of touches at the bottom and a couple of touches at the top, and then the prices looked like they were maybe breaking out from this and going towards the top side. At this moment, they were taking out what could be conceivably like the fake out territory of the measured move, although really we would have needed to have looked up towards the higher 41,000s, you know, up towards 42 for that. But anyway, what could conceivably have been that at 41,000 when we moved from lows of 40,000 and pushed up this area. But what we didn't see was if any follow through with this volume. As you can see, there was one candle there in it around about the time as we were coming up towards the top that looked a little bit bigger than the previous ones, but we didn't see anything really that big. What do you mean by big, you might be asking? And as you can see with these big candles over here, well, that's what I mean by big, and this wasn't. And then we came back down the way and tested it a couple of times before cracking down towards the lower side. So when we came down to 39,000, we had a sort of particular psychological setup here, which is often referred to as like an Adam and Eve or whatever. You can see this over here as well with this structure, you know, the first chunk of that wedge, and then that gives you this sort of nice neckline. Now that all just really is just whatever particular route that you want to get into, or saying that there was a distinct area of support which we needed to not break. And as you can see, when we came down to the bottom side of it here, we did actually bounce back up again, up the way, and didn't manage to make it outside of the wedge. Then we did come back down again. I said a wedge there. Again, you could have chosen whatever particular flavor of pattern that you wanted to for this one. It was kind of like a one size fits all, or an all size fits one, or one for all for one, whatever, Dogtanian, you know. But then we moved down the way and we came down towards this yellow line here, and I'll explain what that yellow line is in a minute. But as you can see, we came down, wicked way below it, and came back up, and it did look fairly positive at the time. So if you're in the Discord yesterday, for instance, you'd have seen for instance Shaman and I discussing this area and saying, well, 37,500 is going to be key for us. And, well, it looked like it could have been doing what it needed to do. And what it needed to do, really, if, you know, in all honesty, was break back up above 39,000 again and get back up above this wedge in the same way that it did here whenever it looked like it could have been breaking towards the top side. And then, of course, it got rejected from there, came down, and if I just move this measuring stick out the way, you can see that when we slammed down to the 236 again, we got this green doji here, which was a failure to take out the 236 yet again, and then of course a retest of that, all the while tracing the Bollinger Bands towards the downside. On the 1 hour time frame here, you can see that we pushed outside of the Bollinger Bands, and as ever so typical to do, you know, whenever there's a less than 5%, there's a 95% chance that when you do something like this that you're going to retrace back up to, at the very least, to be at the Bollinger Band line. And of course that's what happened, and more so. And if we were to you know, you can see we've combined these two candles together, or these three, that it takes out those three on the left. So if I look at this real brief on the 4 hour time frame, you can see what am I trying to point out here? You can see, well, actually on the 2 hour time frame, what about this? You can see this looked like it was engulfing these previous candles, but no matter how many times you go up the time frame, it's just stacking up against far too many red ones. And of course, we continue to go towards the downside, and that's where we find ourselves right now, having gone down towards this subsequent line thereafter, which is quite, well, a lot more visible than this one. We had a little bit of an inflection here at this point. This is the 382 Fibonacci. Then we came in here for the 50% Fibonacci point just here, and so far we're finding that we have found support in around about this area. If I just stretch it a bit, you can see we didn't make it down as far as that particular 618 on this particular Fibonacci. By the way, this Fibonacci, for you to know, is drawn in up to the highs on the most recent highs, but it's from the lows down here on the 21st of December, just to keep everybody aware of the context. And then we moved up and we're above the 382 yet again, and so far so good in terms of the potential for us to put in some sort of recovery. But what do we need to see happen? So sorry, just so I don't brush over things too much, I tried to explain from a technical point of view just there now, kind of the why, or the how, if you like, of coming down to where we came so far. And what it boils down to is that we did a couple of things at this 236. We broke past the structure of the previous low. I've been telling everybody along the way to look out for two things: one, breaking past the 236; two, breaking past the structure of the previous low. That was dooming us to some more downside at that point, really. But then we also had this movement down the way thereafter, taking us down towards the 382, finding that we didn't actually get the support that we wanted to see happen. We did look like we could have had a tweezer bottom at this stage, moving towards the top side, but really, you expand this up the time frames, you don't see that as being on there anymore. Move on down the way, and we've gone to the 50%, and that's where Dow theory would say that there's a good chance of us returning towards the top side at this point. But we can still look at this in the same way as we looked at the recovery above the 382 just here, that if we were to look up the way in terms of time frames, candles, and whatever else, that while you might want to make the argument right now, coming into the end of the close today, that we're engulfing this one on the left, you know, that remains to be seen. Jumping up towards the 12-hour time frame, as you can see, this is nothing like an engulfing candle. Let's kind of go in between and look at the 6-hour time frame, and you can see that we do have one, which is why kind of the close of today is going to be looking at saying that we need to see minimums of 34,000 really be maintained for this close, or else, you know, ultimately what that will look like on certain candles is more continuation and failure and rejection towards the downside in the face of this big wick here that we have. Just then, before I jump back over to Tony, sorry to keep you waiting, by the way, Tony, and in fact, I see you've disappeared. Oh, Tony, you've gone, Tony. Well, bring back Tony. Bring back Tony. Tony. I just wrote in the chat there. So if we can bring back Tony, we will bring back Tony. We'll just get over any difficulties that I've got at the minute with this. Wonder what your stream has ended. Let me just see. Do I need to call him again or something? Anyway, we'll figure this out and we'll bring back Tony, but I'll just look at the divergence there, and I suppose I'll bring back Tony at the same time as I am I'm catching up with the chat in there, because I can see there's a few people chatting away, so that's good, right? I don't actually know what the issue is with that one. Hopefully he'll come into the chat himself and tell us if he's still there. Let's hope a meteorite didn't take out his house or something like that. That would be dreadful, wouldn't it? So anyway, what I wanted to look at here just before joining in with the chat is more of the story of how we got down to where we are right here. And we can see that as we came in with these highs, that they're very much bearishly divergent. We can see that across the, well, not this one down the bottom. Ignore that one down the bottom. You just ignore that. We can see that across the board we have bearish divergence of one form or another. Here in the stochastics we had class B, but we got these crosses, you know, and we could see that we were living underneath the predominantly sort of negative shaped moving average on that one. Here in the RSI, you can see that it's very much bearishly divergent, you know, throughout all of these tops. So it's fair to point out, you know, how these tops all the way along the left here have all been bearishly divergent, but we'd had that as well here very distinctly, more distinctly than the previous ones. In fact, I suppose this one top here actually boiled off that divergence as we spoke about at the time, and then we came towards the downside there, and that is not that much of a surprise. Now also in here you'll notice there was a cross here while the ADX was positioned above 20, which is how I look at it in crypto. Now not fantastic, because above 25 would be better, which is why I've drawn that in as orange there on the ADX line. But as you can see, that happened right here at the point where we were looking at, you know, either we move back up and find support, or it's the point of no return, and you'll get this strength of trend showing you that there's more to be given out, more blood to be let than simply just the measured move off of this pattern alone. Okay, so that's kind of where we were. We had divergences as well. You know, the MACD not so great for divergence here on this 4-hour time frame in this particular moment in time, but you know, there we have it. And overall, given that we haven't actually taken out this low on the left, we haven't actually taken this one out in terms of closing below it here in the 4-hour time frame. Oh, got Tony back. Excellent. So let me just see. Are you sharing your screen as well, Tony? If you can do that, that might be good. I don't know. Yeah. And then, yeah, so what was I saying there? Yeah, we had this. Yeah, so if we do, so one thing to be aware of in terms of the positive case is that because of this on the 4-hour time frame not successfully closing below the structural point here at 30,000, we have got a higher low so far if this were to go back up the way. Now, this needs to take out the 50% point here, really needs to take out, to be in all honesty, needs to take out the highs up there. Yeah, the 50% coming in, it really needs to get up above 36,000 if you want to be honest. Well, maybe, I don't know, whatever. But that was actually kind of inaccurate. I don't know. Scrap that last 10 seconds. There we go. Strike it from the record. And then if we, I think I've got Tony in the right position now. I hope I have. I'll just have to check. I'll check Streamlabs in a second to make sure I'm not showing the wrong thing. Got to stop distracting myself there. Yeah, this would be hidden bullish divergence, right? Hidden bullish divergence, as you can see, very deep on the MACD here, very, very deep. And we didn't actually take out the low here from this previous low on the MACD. Looking at the RSI, you see the same thing. Came at the neutral line here, came all the way down into the bearish control zone, back up again. They've given you this hidden bullish divergence. Did I say that first time correctly? I meant to see hidden bullish divergence. Bullish divergence, continuation towards the top side divergence is what you're talking about there, comparing it across our previous lows on that one. And yes, cool, excellent. So that's where we are right now. We know where we really need to take out these areas. We're not in uncharted territory anymore. The targets towards the top side are the same as the targets towards the downside, which, you know, and the targets towards the downside are the same as the targets were towards the top side, really along the way. It's not actually, you know, needing to be sort of rocket scientist style TA here. This was an important point for us in terms of flux and whatever else. In terms of low term time frames, you could make the argument that, of course, there was the low here, like I did at the 236 when I opened up the show. When you go up towards the larger time frames, such as the 12-hour, you can see that that's actually literally non-existent at that point. And the actual low then comes in here at the 30,000 area, which is where we found our bounce at today, offering up us that support. So I suppose I need to reiterate that again. If we go below 30k, bad. If we go above and stay above 34, pretty good. If we get above 36, 36.5, pretty rosy. Danger, danger if we don't successfully take out 37.5 again. But of course, you know, the real moment then thereafter is, will we put in a higher high? Casting our eye back the way every time in the past when we put in these lows along this bull trend, we've really kind of then found sucker in taking out the previous high on all these candles. As you see, once we do it, we then follow through thereafter with follow through. And if it isn't the candle itself that's shattering up above it, you know, it's the subsequent candles. You get these big ones. Like for instance, back here in the 15th of December, we came up here, we managed to put in the high, and then shattering movements towards the top side thereafter. So that is the potential for us, and there's more or less your sweet. So I'm going to check in with the chat and hopefully somehow manage to get, oh my god, I have got the wrong screen open or something. I've not got the wrong screen open. No, I can fix this. I can fix it, Tony. I can fix it. But let's just check your audio's working. How are you doing in there, Tony? Are you still alive? No, damn it. Hold on a second. Are you muted or have I muted you? Check if you're muted. I believe that I cannot hear you. Do 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 do.
I believe.
Oh. Gosh, is it working? I mean, I had a split second of your audio there for a second, so I assume it's got to work. My apologies to everybody for my stream, my bad, what'd you call it?
Can you hear me now?
Yes, I can hear you now, Tony. Good to have you here.
There we go. We've sorted.
Okay.
So that's video. I mean, that's audio. Just to get a picture of my ugly mug on your screen now.
Oh yeah, that's right. I almost forgot. I was so relieved to hear your tones of your voice there that I forgot about your screen. Instead of oh, what am I doing here? Can I undo this? That would be nice if I could undo. Right. Okay. There we go. Let me just grab the actual thing. You know, my skills in terms of this Streamlabs stuff leaves something to be desired. I have to admit, if anybody out there has got Streamlabs experience that knows about, you know, getting guests on their show at the same time and wants to educate me, then I'm all ears. Let me just try and find your face on this here. I can spread it out a bit. Have I got the wrong tab open? No, that's the right one. Where's... Oh, it'll be too high. Why don't you entertain everybody for a second here, Tony, while I find your face?
Well, I'm quite happy to entertain everybody. It looks like when I'm looking at the picture, all I can see is the Rocky Outcrop logo with the with all of the different watch on your watch list. So I need to be dragged into your watch list.
Right, I've got you back. I've got you back.
9.75.
I've got you back.
You nearly got me.
Right, I've got your face on there now, so that's pretty great. But are you still behind my logo? Can you? Do I need to move the whole bit up? Are you behind my logo?
Yeah, no, keep going to the because the problem is that's in front. You need to put that behind the vector.
Wait. Don't ask too much of me. Let me just make sure that I've got the right. I'll get you, and I'll just drag you. So that's not an appropriate place for you. We'll find an appropriate place for you up here in the sky with diamonds. Right, great. Maybe I'll just pop you here for now. Is that good?
Yeah, well, I'm quite comfortable.
Right.
It's quite a nice place to be on the bottom, you know, I can just sort of sit here and take the rays in.
Right. Great. Fantastic. Did you hear the TA during that section and was it?
Yes, I was listening to everything.
Is there anything you think I've missed out on that needs to be talked about, or anything which I maybe went over too quickly?
I mean, nothing at all. I just I'd say that there's a lot of things. This is the problem, is that in order for everyone to get where you are now and get to the standard of the Rocky Outcrop tacticians, they would need to watch all of your videos and go past everything. And I thought what would be nice was just to go over some of the basics of things that we're talking about today that people might not know, that you have mentioned in the past, but unless, again, they go and look at your videos, they won't know. So am I right in thinking that my screen shared, that you can see my screen?
I can bring it up and make it visible. Let me just see. I'll have to make my own one invisible, and I'm happy to do so. So that's my own one invisible. All right. That's more than I wanted to make invisible. Just a second. Where's those guys? Right. Yeah. So I just want to.
I can't see.
This. Yeah. I'll be with you in just a second. I had this all set up beforehand, but that almost feels like a different world now, Tony, to be honest with you. Right. Let me just drag everything in the right place. Okay, is that in there? Is that what I wanted to do? I did the wrong thing. I can get a guest, make it visible. Right, let me see. Where's your screen at? That one? Boom. Okay, cool. So while the layout on this one is seemingly imperfect currently, I have yeah, there you are. You're on screen now, Tony, so you can go ahead and say, is that the right one? Just, yeah, you changed something. Yeah, because obviously I'm confused because I'm looking at the same charts here almost.
So
but
I've got the CME here. I'm on the Bitcoin on the daily.
Excellent. Yeah, I can see that there. Perfect. Fantastic.
Excellent. Okay, yeah, just some of the things that I thought would be worth covering. We were speaking to Nyron earlier. The Bollinger Bands are something that I tend to keep on quite a lot. Whether you're looking at the daily, the 4 hourly, whether it's micro trades that you're making. The thing is with the Bollinger Band is this medium line here is the 21 moving average. Is it the simple or the exponential?
It's the simple.
It's the simple moving average. So generally speaking, whenever we're above the candles close above this 21 EMA, we're in a bull trend. And as you go back in history, as far back as you want to go, you'll see that we bounced off it, came back up, bounced off it, So as soon as we start breaking it, then we know that we're in very dangerous territory to the fact that we might be coming down for quite some time and bouncing off the bottom Bollinger Band.
That's a real.
So the Bollinger Band is, it's a really good instrument just to have in your arsenal, just to put on quickly. If you don't want to be going into your settings of your moving average, changing it to 20 or 21, and then going into all that, just press your Bollinger Bands. And this little F here, F plus, you can press that, type in anything that you want. Feel free to have a look at what it is that I've got on there, and they're my favorites. But all these things here are all just in that little tab there. So you tick Bollinger Bands, they come up, and then you've got your 21 SMA, simple moving average. And down here, the oscillators, my two favorite ones, the RSI, Relative Strength Index, which is what Rocky uses to work out bearish and bullish divergence. And he did the best tutorial I've ever seen on bullish and bearish divergence, probably about 3 weeks ago. So it's worth joining the Discord. Definitely join the Discord. The nuggets of information that go on in there are priceless. So join that, and we'll stick links on there so that you can watch Rocky's video, so you don't have to scroll through. But that people would pay money to understand bullish and bearish divergence and hidden bullish, the way that Rocky explains it. Spot on. So yeah, that's one thing. So that's what I use the RSI for. You'll know whether there's going to be a reversal of whichever way it's going, using that technique. That along with the volume here. Volume is also something that's very important. And then this one here, I've got RODMI. This is something that Rocky has programmed himself, which is a mega signal indicator. It's about to cross over actually, which is interesting because it looks like we're going down. But when the yellow goes above this sort of, what would you call this, pink? When the yellow goes above the pink, so when it crosses over like it did back here, we know that generally the market is about to go bullish, and it did. It wasn't parabolic, like this is parabolic here. This is really powerful. But the reason why it didn't is because on his indicator, this line, this median line, I call it, wasn't blue. But if you ever get to a situation where you've got Rocky Outcrop's DMI, and the yellow goes up and crosses that pink, when we're in the blue, then you can expect it to go mad. Look, it was just here, just as it was about to cross back over and go bearish and go, oh dear, there's a problem. And it just so happened that it was at the smaller, but it says large there, but it was at the smaller CME gap. So it was a little bit unsure of the market. But then when it went up, at the blue, which was the buy signal, and it went parabolic and it's gone up and it hasn't crossed since. And now we've got this reversal coming down, and we're bounced off of, what have we bounced off of? The 21 or the 20 SMA, which is this bullish line. So again, be careful and watch. This is my advice: just be careful and watch what's happening on this line here, because it's really important. If we get the what we call the daily close on this situation, which is when the candle closes and we move over to the next time frame, yeah, that's important, because if we close above it, then we can expect it to have a continuation of either a continuation up or just some sideways movement, and then we can start looking at a no zone territory trading until we find out some patterns, be it head and shoulders forming, W patterns, M patterns, whatever it is that shows whichever way the trend is going to go. But these are my two favorite what they're called oscillators. So anything down here, the MACD, the RSI, all these things down here. These are all oscillators. Yeah, so just some simple things there. I thought I'd put quite simply for the people that are not quite sure of the terminology that Rocky uses.
That's fantastic.
That'll be me for a little while.
That's really useful. It's really useful. So yeah, for instance, there I forget to say so often that those things that I'm looking at below the price action on the chart are called oscillators. So when you're watching, and of course I'm not a YouTube monogamist, I understand that you'll be watching various people out there and reading articles and all sorts of things. If you see somebody saying something about oscillators, then they're generally speaking about those lines down below there, below the chart, those indicators. And often as well, you'll hear people, you will hear people say or read about people saying momentum indicators or momentum oscillators, or MOMO as well. Some people talk about MOMO as short for momentum, and that's what they're referring to down below. And yes, as well, it was in fact Tony yourself there, you requested that I would make a DMI educational video one time, and I just did it, and it ended up being an hour long. So there's, you know, benefits and drawbacks to that hour long video, but if you watch that, then you'll get a pretty solid understanding of the DMI. But it was a case of that sort of Mark Twain or whoever you want to attribute to, sort of, sorry I didn't have time to make a shorter video, you know, that sort of sorry I wrote a long letter, didn't have time to write a short one. That idea, because because you know, it takes that long to explain what it is, and of course, you know, how you use it and everything else in extreme detail. But Tony's summary there is really ideal. Really, you know, you look into these key areas, and it's so, and look at that pincer strike there that's happening at the very end of the DMI. This is still Tony's chart that's open on the screen at the minute. You can see there on the DMI that the two lines, the pink and the yellow one, are right on each other, while the blue line is, you know, while the ADX line is still blue up above. And what that's kind of saying to you right now is that if we were to get, you know, to crack on down lower and continue to, then, you know, we could, if we get any sort of follow through past where we've been at with our lows so far today, then it's a very scary story in terms of the potential for all of that momentum that's just been built up in the market, or if you like, the strength of that trend that's been on the go there, to give you a shocking move against you as well. So, like, you know, in the way that he pointed out a few minutes ago, when there was the positive cross, and we got this great follow through, and the strength of trend was showing you that there in the past. You know, we could theoretically be looking at, you know, it's on the precipice right now. But he qualified that as well by showing us, you know, just earlier on, how there was these moments, you know, where it did that before. It almost looked like it was going to cross, you know, around about the middle of that, yeah, and then it broke away from it and it continued towards the top side. So that kind of is the same sort of summary as what we were, as well. It's not a summary. It's confluence with what we were already kind of discussed in the show earlier on with regards to.
Yeah, doesn't it show that where you're going with that is that as this starts to happen, this parabolic move here, that the volume, I don't think my screen's been shown. I'm looking at my my Mac as I'm doing this, and all I can see, I don't think anybody can see what it is. All of what I've been telling everyone, I don't think anyone can see it.
Seriously, Streamlabs ripping me off there. Cheers.
Yeah.
Can we get confirmation from the folks at home that nobody's seeing Tony's stream? What's it show? Is it grayed out, or is it just not?
Yeah, I think all they can see is a real zoomed in picture of my of the rocks.
Are you kidding me? You're kidding me. On my screen it looks perfect.
Never the said. I like the DVD logo saying screensaver.
Oh my god. Oh my god. Oh my god. That is
which is a shame, because
it was really good, man. It was really good.
Everything was probably quite boring.
I'm sat here enjoying it because I'm watching your screen at the minute on my Streamlabs, showing me that window. That is what can I do? Hide it and show it again, maybe. I can.
I think we're good now.
Yeah,
I could be wrong on that. let me see.
Looks good here. We can see Tony's screen.
We can
Great.
see Tony's screen.
That's
Lewis
brilliant.
Ellis.
Thanks so much, Lewis.
So we can, thank you, Lewis. Yeah, so yeah, so that was good. Another thing that you know, the CME gap here is a big question as to whether it's going to be filled or not.
That's that gap at 25,000 ish area.
I've got it in at 23,685 when I checked it out, but I wasn't too sure whether to go from the where are we? CME. Yeah, I wasn't too sure. If I zoom that right up so I can get a real nice. Oh, hang on a minute. Sorry about that. If I can get a real nice. I've gone from the body there 23,685. Wasn't sure whether it would wick down generally to the wick or whether to the top of the body.
I look between the. I just tend to look between the wicks myself at the real empty space. However, what we're looking at there, really, I mean, it's you've come so far as the question will really be how do the prices respond when they're in and around about that area? Because if they do go on down and go any further, then that of course is potentially fairly catastrophic. If they were to go down there and bounce back up from that region, then that's fine. And whether that happens to the body or not, you know, that's that. But I do tend to say that if there's a gap left on the charts after, so you get a partial fill, so it fills it halfway down, but it doesn't do it the whole way, then I tend to kind of view that gap as still being open with regards to that the remainder that's left on there. So then you can kind of look between those two areas. But yeah, so that's 23. You were telling me something before we started in your discussion show about the difference, you know, the distance between where we are, where that gap is.
Yeah, I just found that interesting. Down here, guys, there's loads of different tools that again, if you're not familiar with, it's worth just spending half an hour going through them all and learning what it is that they do. Things that I like to use here is the horizontal. So if I want to put a line somewhere, I could just click it and then let's put a line there straight for me, and I know that it's a vertical line. But loads of these tools are good, and one of the tools that are on there is this one here. Which is date and range, and I use it quite a lot. If I want to know, let's say we're going to go from this obviously a great support here. So if I was going to say where the support started to where, I don't know, it'd help if I clicked it, wouldn't it? Where the support started, so just here, all the way to the top of where the highest wick was, we've got a halfway line there. And you'll hear lots of people like Da Vinci, also Rocky. Most people that are into crypto, we use Fibonacci retracements. And if we draw the fibs from there to there, you get the halfway line, the 50%, which you can't see at the minute. The 50% way lines up here, which is around about 33, which again, there's another support just here. So I would imagine, just in my own kind of thinking, is that there's gonna be a support here at this point. It's the 50% Fibonacci, which is your first number in the Fibonacci sequence. Yeah. So and Richard was saying earlier that 33 and a third to 333. Was a number that you were looking towards, wasn't it, Rocky?
That's right, yeah. So we made it back above it so far, and that's good. And of course, we've got 45 minutes or so left on the day. But it's really kind of at this stage we're going to have to ask, you know, how are we looking tomorrow and the day after, etc., etc., and can we maintain levels above that? And it's a nice there's a nice sort of symmetry to how the distance between where the gap is and the top of the prices.
That's what I was going to say.
Yeah.
I interrupt you there. It's just the if I press this this measure move, I can measure what the distance is. So we'll go from the top to where that support was, which is also just so happened to be where the CME gap is, which is a massive exchange that people use and therefore gets respected a lot. you find that it's around about 40% from the top to the bottom. Again, halfway takes us to this same support just there, which is where these candles have come about. So, and a 40% retracement. If we look back in 2017 bull run, all the way through, it would go up for a couple of weeks, and then you get a 20-30 retracement, and then it go up again, and then it'd be a 30 to 40% retracement, then it'd go up again, and then you get your 30. So between a 30 and 40% retracement is a common occurrence in the bull run if we were to look back at the past. And whilst we know that the past doesn't dictate the future, it is very similar. Obviously, we're not talking about fractals, but we are talking about a bull run. We're now in even more. In 2017, the banks and industries weren't talking about, and everyday consumers weren't talking about cryptocurrency the way they are now. So there's a lot more exposure to cryptocurrency. So therefore, the bull run and the volume is of course going to be a lot more. So the retracements are going to be more, and the hype is going to be more. So they're kind of my thoughts. Yeah,
it's nice when everything kind of lines up neatly for two reasons. One, just the fact that everything lines up neatly, and it makes you can kind of see a whole bunch of opportunity in around those areas. But also secondly, because it gives you more than one reason to be deciding on how you're going to trade at a certain point. So when you can see all this kind of tying together. For instance, when the prices went back up above 33, you might have thought to yourself, well, they dropped down below, they're going up above this area, I've found all of this different confluence in and around it, I could now potentially manage my risk well here compared to any other arbitrary point and where you could be getting in. So while the question for everybody is kind of almost not, I mean, it's not the question for everybody, right? But the question we all hear all the time is up or down, right? Up or down. And it's well, that's all fair and well. It's far better to be saying where's the areas where it's really critical that it does one or the other. I mean, well, it could go up or down from right where we are right here, right now. It's much more critical in my eyes that we stay above, for example, the 34,340 area where that 382 is, blah, 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 that I was kind of talking about before, using in the analysis earlier on, than it would be from this exact price, right. Actually, no, almost take that back, because we're right at 35,000, but these types of ideas, it's like at any given time you could have an arbitrary point of view, where you just kind of open up your charts, you think, I'm feeling good about Bitcoin, we've had a big pullback, I'm going to get into it, and that's what a lot of people do. Or you can take the time to do the TA, find the critical areas, and then make your entries and exits based around these concepts. And that's the heart of what TA is. And then whenever you see a number of different things lining up quite nicely, like Tony found independently, this is stuff that Tony was looking at independently himself earlier on, and we chatted about in his chat thing earlier, is that that you can then iteratively improve your own ability to trade off the back of something which is empirical, as in, like, it's hard data that isn't based on the random factor of just whether the price would go up or down from where it happens to be any given moment, and that's and then Tony's found a number of things here that he's talking about in a little bit more detail, perhaps, or drawing more reference to perhaps than I was, where you're looking at right where his crosshair is right now, and whereas the DMI and all these sorts of things happening, where you can see that there's a pivot there in the market, a potential pivot, and then for that to line up again with ideas like 50% is there is more to it than just saying that 50% is, that's just an easy number, is there, or whatever, it means something. It really does when prices go past significant areas. So 50%, for example, is something that we can all kind of understand, and there is significance to 50% as opposed to 42.6% or 57.9%. You do look to these areas, and so do a lot of other people. So whether you want to put it down to like a herd mentality or a self-fulfilling prophecy or whatever other thing that you want to kind of say is what's going on here, we find time and again that looking at key areas in the market really works, and the sort of thing that Tony was doing there to kind of discover an area is really nice. And then independently of that, and I can't actually remember off the top of my head why I said it earlier on, but independently of that, I said I'm looking at the 33s, all the threes, whatever that was. There was a reason for that, pretty big reason, yeah, a really big. So let me just, so yeah, Tony, I'm just going to hide your screen for a second here, right? And bring back my one, because I do remember. I'll just kind of overlay mine on top of yours. There we go. That's kind of like, that's good enough. So I do remember. Wait, I do remember. Why am I saying that? I remember now. Why this is why, you know. So we were talking about stuff, and Tony had already thought this independently at a different time, whatever. And I said, I wonder where the prices are now in relation to our March lows with regards to the Fibonacci retracement, right? So then I took out the Fibonacci thingy and I drew in from the March, the 12th lows, up to the highs right now. Now, forgive me for not being, you know, necessarily properly to the penny exact on things here. No, I've drawn in. That wasn't the reason. I thought that was the reason. It seems that this is here. It's 30. There was a. What chart was I on when I did it? There was a 50%. You know, a significant area, but I can't remember what chart I was on when I did it, and if it lines up differently or whatever. Anyway. Was this the chart here? Yeah, right. Okay, so right, great. So I can see this came in from around about these lows down here up to around about the tops up there, and likewise, you know, forgive me for not being exactly on the penny when I was drawing this Fibonacci in, but this is what we were discussing earlier on, and I was saying that you can see here that the 236, and this is from the entire bull trend, right? The entire one since March, if you like. The entire trend towards the top side up to the very, very tippity top from the very, very bottomy bottom. The 236 comes in here at around about 33,000, and I was looking at it at the time and saying, well, you know, I'm kind of looking towards all the threes, 33,333 or whatever. And then Tony chips in and says, that's a funny coincidence that you happen to mention that number, because here's what I'm looking at. And then, you know, and it's good to see that, and you can find, and it doesn't matter what particular route you take to doing something like that, it all counts in the end. As we see, the price is currently above 35,100 and whatever, 35,200. So there's a couple of things that we can look at now, I suppose, in terms of the here and now with regards to the look at those oscillators. So I have too many oscillators on the chart at the minute. I'll just remove this one off the bottom, for example, give myself a little bit more space. So I've got a lot of these indicators down here. The bottom one there is Stochastics, by the way. That one there and that I'm pointing at now, that's the RSI, and then this bigger one here is the DMI, and I'm just kind of shrinking all of that out of the way just for now anyway. I wanted to say, look, there's a couple of things here in terms of the 15-minute chart for the here and now of what we're doing, which really matter. As you can see, coming towards the downside, we've got this 236 coming in there at that price that I just discussed. That's the price, that's the 236 I was just talking about there, in there at 33,000 or so. We want to be a bit above there, and 33,333 is just, you know, it's just above that. I'm not looking at the exact point of this because it's not, you know, it's not about the exact pennies. It's and I'm looking slightly beyond that and saying, well, I want to see it up above, you know, 33,333, and so there's that, and we're doing that so far. We've come towards the downside here, and during this downward trend, so looking between this point here on the 11th of January and down towards where we are here, both of them, 11th of January, sorry, that's today. So here at 7 a.m. down towards 4 p.m. here. So go back at 7 a.m. you can see the 11th of January. So, well, actually it doesn't really matter, because you can see this whole entire thing is towards the top side. Don't need to be so exact about it, while this entire thing here is towards the downside, and that of course is bullish divergence. We've got downward price action during a downward trend, and then we have upward movement here in terms of the lows on the RSI, so that's called bullish divergence. So we've got this bullish divergence on the 15-minute time frame coming down here, down to down, put in what could be, you know, this is a high, it's a lower high in terms of the downward trend, but if this is the beginning of an upward trend, then it's actually the first high of a potential upward trend, followed by a higher low just in here at this I zoomed out a bit here, just in here at this low, this is the potential higher low, and this happened in it around about that 236, and then of course we've moved up since and put in another high at the minute. So we have this, so that's the follow through from the bullish divergence on the small term time frames. But we can see, you know, when we sort of expand that back out the way, that there's still a measure of work to be done, and that's why, you know, it goes back to me what I was talking about earlier on about 36,500, for instance, being a really, you know, things start to look good then. 37,500, you know, much better, etc., along the way up the way. But the reason why this is important again is because in there it's 36,000. You can see we had this in this previous lower high on this hourly time frame. So while on the 15 minutes we've taken out so far one high of, you know, we've taken out one high of the previous downward trend. In terms of the hourly time frame, we've not really done that yet. We've got that just above our head, so we haven't changed anything from a slightly broader point of view. And we all know then, I suppose, the people who are trading this down here were doing it in a way that allows them to go up and actually take profits anywhere along the way and benefit from the fact that the prices managed to do what they've done so far without having necessarily taken out the structure of a bigger time frame. And this bleeds the whole way up the time frames, you know. So when we go into this period where we're looking and saying we've gone above 36, blah blah blah, then you can look up the way and say, well, how does that look in terms of, say, the 3 hour time frame or the 4 hour time frame, etc., etc. And on the 4 hour time frame you can see that there really wasn't much of the whole up down. It was just straight down. And you get back to this point and you say, well, until times is, you know, at the very least we're coming back up and challenging where we had our last, you know, where we had our support and resistance at before, as demonstrated by all of these wicks and bodies in this region. And let's just call it 37,000 whatever. But if you take out 37,500 for argument's sake, now we know what that story is because that was also where that descending triangle was in the 236 at the start of the show. Then that, so you've got significant importance in that area. Then, you know, you're starting to do something that registers on this time frame in a type of, you know, in the format that you could maybe think about, I don't know what, going to sleep or going out for dinner or whatever. Whereas, you know, we'll often find that people trade on things like exclusively on the 5 minutes and the 15 minutes as they're sat there at the desk, and then they think to themselves, I can never go for a wee, you know. But they've got the mentality, what they think what they're doing is trading on a bigger time frame, because they'll sit here in the 15 minutes and the 5 minutes and they'll say, yes, it's great, everything's going well, the next target's 44,000. And it's like, buddy, we're at 35,000, and if we don't take out 36,400, then we've really not changed anything on the 1 hour time frame. So what are you talking about? And that's why it's important to be able to tie all of these things together. And I suppose that's where we are right now, or what? Well, that's where we are right now. What do you make of that, Tony?
I think that's a very, very good point. The different time frames are absolutely crucial. I mean, you, myself, and Nyron earlier on, we were talking when I put my Litecoin trade in, and we were going around different time frames trying to find out where the best entry was. And it was an exciting movement because it was the emotion versus your head. You know, your heart's saying, well, I really want to get this trade, so maybe I should move it up a little bit because I don't want the candle to not quite touch my trading and then bounce back off again. But we were looking at different time frames, looking for different signals to turn around and say, is it going to come down and touch? You know,
and it did.
So you know, time frames, that and obviously the trade got filled, right? Mm-hmm. And if it wasn't for looking at those different time frames and looking for signals, we wouldn't have been able to notice that. And I did, if you don't mind me just saying, I'm looking at the comments there, and I see Zona. Excuse me if I pronounced that wrong, but I've seen Zona mentioned about a beautiful Adam and Eve pattern, which is very similar to the W patterns that people see me mentioning quite a lot in the Discord. It's something that I personally love, you know, M patterns and W patterns, but there can also be called Adam and Eve patterns. And is my screen on, Rocky?
Oops, I've still got mine on, but I'll just hide mine and yours should still be visible behind. There it is, right there. That's cool.
All right, so this is Bitcoin versus the USD. But I'm only on the 15-minute candle. So here, the 15-minute. So do you remember me saying about the red line being the 21 EMA? Because we've gone to the 15-minute candle, the red line no longer is the 21-day moving average. It's now the 21 or the 20. Sorry, simple. It's the 21 candles, and the candles that we're looking at are the 15-minute candle. So if you wanted to get the 200-week moving average, which is a really important one in cryptocurrency, you would put 200 in your settings and then press this button here and go to the weekly here, and then you'd have the 200 week. But as we're looking at the 15, if we're typing 15, then we got the 15. So anyway, just wanted to clarify that, because you'd be surprised at how many people are not aware of that. So, but with an Adam and Eve, what you've got here is this bottom here. If I get my little tool on, you've got this bottom here and this bottom here. You've got your Adam and your Eve. I don't know whether that's a sexist thing, because Eve is a little bit smaller than Adam.
I just try and think it's the. I just think they based it off of bathroom logos, and we're all just influenced.
Brilliant. But it's also a W pattern, and something that is interesting about W patterns, again, that isn't necessarily known too much. If I just draw over this W here, it goes there, it comes up, it goes down, and then it comes up and off it goes. So there's your two bottoms. Now, as when you're looking at the W pattern, it needs to be in line with the trend. So the trend's going up at the moment. If we were to, let me just undo that. If we were to, let me get the delete button. If we were to change that pattern, hang on a sec, guys, I'm not used to drawing it. If we were to change that pattern, if it was to go like this, W up, and then it was to come down here and then go up, then it would be null and void. You would be able to trade that. It'd just be something that you would say, okay, well, that's not a buy signal according to the W pattern. Where's my delete button? So just bear with me. Everything will be made. What's the word I'm looking for? I'm pressing delete, but it wasn't deleting for some reason. To do this like this. So what you do with these is you've got your W, which I've now drawn in, so I won't do it again. You can see quite clearly if I zoom in a little bit. You can see quite clearly that if I remember that line that I said, I put that line just there, you can see that there's your W. You can see that the bottom part, the first W, is lower than the top part. So that confirms that as long as this breaks through this line, the W pattern is now in play. So the point where you put your trade in, according to this pattern, isn't down here because there's no confirmation. It only confirms when it breaks the neckline of the W. What we then do is we then change this one here to a vertical line. We can draw our line from there to the W. Oh, hang on, what's going on there? Let's try that again. We can draw our line from there to there. Press the clone button, and then that'll give us, if it'll let me, let's get this out of the way. Let's get this out of the way. Do that again, sorry guys. You would then, thanks for your patience. Yeah, get that to there. Right click, press clone, and then you can move it to, that's where it started. So that's where it started. So now our trade, once you put your trade in there, your trade should reach this point here. And I guess, I mean, what we're on at the 15-minute, and I know that Rocky can tend to talk lots and lots, and I don't know how long this is going to go on for, but we could probably see by the end of the, I would like to see by the end of the evening. So we've got half an hour to see if this trade here would have got filled should we have taken the trade. I'm not suggesting that anyone takes the trade. I haven't taken the trade, but it just so happens that as I move the thing, we've got a support. So here we come with, here's your W pattern or your Adam and Eve, and it's coming up, and you've got your support where it was just there. So, and it's acted, it bounced off there, it bounced there, it broke, it came up, bounced, it came up, bounced, it's come down, and now we've got this trade, funnily enough, that's just worked out perfectly to this point here. So if you had have done that and spotted it, then it's possible that you could have made yourself a 7% gain, and maybe with like a 3% leverage with maybe a stop loss down here, you might be able to get yourself a 7-to-1 trade there. So yeah, so that's trading patterns. They're very effective, and yeah, really good stuff. But that's just a simple way of trading an Adam and Eve or a W pattern, and that works exactly the same on the inverse or the converse. That it'll work as an M pattern as long as it's going with the trade, with the trend. So the Adam would be first, and then the Eve, or the top of the M pattern would be higher than the second part of the M pattern. And then you do your measured move. You'd put your trade in at the break of the shoulder, and then you would exit. Don't get greedy, because that's what people do. They get greedy, and then it all goes wrong, and then they lose their money and get liked. So take your profit as soon as it hits where you turn around and said, that's where my profit is. Take it. Don't be greedy, because you lose money that way. Yeah.
Brilliant.
Sorry.
Brilliant. No, that's brilliant. That's brilliant. I really, it's really great the way that you actually explained that there. I really do appreciate it. I think everybody in the audience will really appreciate it as well. And you know, what you've done there for people is you've pointed out a way of trade, like a strategy, if you like, or a technique for trading. You've shown people how you could place your how you could manage your risk as well during that chat. You've told people how they could manage their exit or their plan for the exit. What went unsaid, I suppose, in that sense, is that that's where you can aim to. 7% not to be sniffed at. Fantastic move. This is only the 50-minute time frame as well, so it's like a wonderful move on a really low time frame where you know, Tony's saying, like, let's check in with this and see if you get the full thing in the next wee while. It's not like you're having to wait around 6 months to get this sort of return, or a whole year in terms of you know, whatever APR you might get on a staking or whatever. You're talking about something in 15 minutes, you know. So it's like, and of course then as well, what maybe went unsaid is that you don't need to go for the whole 7%. Of course, don't ever be shamed about taking profit at whatever level works for you. This concept that he's talking about here is, of course, like all the concepts we talk about on the channel, applicable across all time frames. So there isn't really a sort of a way of doing things on one particular time frame that you can't do on any others necessarily, which is really which is important to look at, you know, and to be aware of, because it's not like you can say to yourself, oh, I'll ignore massive moves outside of the Bollinger Band on the half an hour time frame because we're still within it on the 4 hour. You know, while ultimately you could still aim to go higher, you're going to see this flux in between, and that explains an awful lot of how you see the price action move in between, you know, in ways that you might otherwise have just kind of overlooked because you're looking at a larger time frame, you're not interested, or you're looking at a small time frame and you're wondering why it kept pushing on past a certain level. Well, maybe it's because of one of these factors on another time frame. So if you just look around, you'll find that. And the last thing I would say about it is that it's really interesting because you're talking about a couple of things here at once, like with the idea of how a double bottom could come in roughly. Now, this isn't your typical double bottom, which are just lined up with the perfect same price point for the double bottom. But what you're looking at here as well is it's also not. It's also because it goes down, then up, then down, then up, right? And at that level where it's gone up again on the W at the top of the bits of the W, you're talking about a twin peak pattern at that point as well. So you're combining all of these ideas together to really say, this is my neckline, this is my this is my measured move, this is, you know, the failure points. And when people talk about double bottoms or double tops or twin peaks or any of these sorts of ideas, it's some variation of what Tony went through, whether or not, you know, it's that specific one, or even if it goes on beyond the double top double bottom idea, you know, with a head and shoulders, where because, you know, you've got 4 touches, you know, you're looking at a top that was broken with a higher peak, and then it came back down again, and it's not a double bottom or a double top, you know, in terms of the peaks on a head and shoulders, but then you've got these 4 bottoms that then get broken down, and all that sort of stuff. All of them, all kind of resolves into the same thing again. So while you can look at a textbook like the Encyclopedia of Trading Patterns by Bukowski, which is yay big and goes on and on and on for hundreds of pages with extreme detail and tiny text, it can seem overwhelming. There is a common thread amongst all of this sort of thing, and you can understand it from a really sort of easily accessible psychological point of view, where you just have to kind of, you know, put yourself in the mindset of considering how painful it could be at certain points, psychologically for some entrance into the market, and it gives you, just think about it from a psychological point of view. What would it necessarily mean at that point? And it's easy when you cast your mind back. For instance, the Head and Shoulders one especially, or this W pattern. If you're looking for this to go down, it comes down and it doesn't make a lower low. And you're wanting to get, and you're thinking on your short, oh, I'm going to make profit, and then it goes back, and you're like, okay, so let's give it another shot. Oh, I'm making profit. I'm going to make more than I just didn't take a second ago, and then it starts going back up again. You're thinking, wow, I was going to make 10% profit, then I was going to make like 5% profit. Now I'm here at break even yet again, and it looks like I'm actually going to lose money on this trade. Cancel. And that's the psychology that's operating on the opposite side of the W at that time, once you go past that neckline. And then, of course, that's providing liquidity along with your own effort at that moment towards the top side, because whoever's shorting, obviously to cancel out a short, you need to go long. And that's so often what you find when you ask the question, who could possibly be going long here? It's so often people who are just closing out shorts from earlier on, etc., and preserving capital and stuff like that. So that's how a lot of this liquidity comes into play for us. Wow, we've really explained quite a lot today, Tony. That was really good of you to do that. Do you want to put on the Rocky Outcrop, what do you call it, RSI on there as well, the one that I use on my charts, or are you just content using the out of the box one? Have you got
the DMI?
The RSI. I've got my own RSI as well. If you want to have it on your charts.
I haven't programmed that in yet. Unfortunately.
Well, if I just stick on my screen for just a second, right? Just a second. Now this isn't me shilling something here. By the way, peoples. Let me just bring this up. This isn't me trying to sell something here at all in any way. I'm just showing you how you can get this for free. I'm not trying to. It's just, and this isn't necessarily going to revolutionize your life or anything. But I just want people to be aware of. Oh, Tony, I've killed it. I've killed it by going to Discord again on a different tab. Have I? Let's hope I haven't. Oh God. Right. Anybody?
Can you still see me now?
They can't actually see you this very second because I've gone messed up. Let me just bring you back. I think I'll have made. Yeah, I've got you back on screen. Yes, phew. Whew. Right. I just want to show everybody how they can get access to this. It's dead easy. And if I do, can you hear me as well at the minute, Tony? As well.
I can. Yeah.
Yeah, great. So if I've just shown people, this is the Rocky Outcrop Discord. Okay, so all the Outcropticians who use Discord are here. Now there's various rooms and all the rest of it. What am I looking for here? The indicators thing. Am I want to do it in the indicators thing? Yeah. Where have I put that channel? One advert for my own Discord. I can't find the indicators. Where's indicators? New Moontown, New Pairings, Algorand, Course. Oh, there, indicators, etc. Right there. Good stuff. So the way that you can get it, and it's already in here, but I'm just going to show people that it's definitely the one that I use myself. Just, and again, it's like, and this thing shouldn't, it should be, in my opinion, this sort of thing should be free and all the rest of it, because I want you to have it, and it's nothing unusual. Now you'll have seen people in the world using an RSI just like this one, for instance, but for instance Eric Crown's one's hardly different at all, but his boxes for the bullish control zone and the bearish control zone are in different places to mine. I've got mine slightly different because I want to have it so that if I could actually see this, so that because it's like crypto. So the way that he has his from is more like a traditional one from back in the day when people talked about things, and I've made mine slightly more extreme to be a wee bit more appropriate, perhaps, in my opinion only. So anyway, there I've just pasted that in, and if you want to, you can add that yourself, Tony, on the screen if you can remember how you add it and everything else. I mean, I don't know if you
what I'll do is I'll copy from the first / and all the way down to the bottom, right click, select copy. Then I'm going to go into where is it? I'm just going to move my I just need to shrink my screen in a sec.
Yeah, the Pine Editor thing down the bottom there is might not show up on mine. Is it?
Hang on a sec, don't worry. There we go. Move that up. Then I've got this Pine editor.
Mm-hmm.
And then, do I actually go from one?
Yeah, just take the whole thing. You can do Control A and all that. Just take everything, paste over it. There we go.
So there you go.
And then
so it starts / at, then it ends in 30 close brackets. Press enter, right? Or
and
add to
save
chart.
it. It's add to chart there. Yeah, you can save it as well, just so you've got it saved. I mean, that's always good to do, I suppose.
It's RSI and EMA. Save, add to chart, and there it is. So because you've got yours there now, I'm just going to remove my RSI just there. And then extend that. Let me just minimize this for everyone and bring that up a little bit. And I just want to make a comment on this in a little while, if I may, just in case anybody decided to trade it on the back of what I was saying, which I said not to. But let's just see. Okay, there, back to you, buddy.
Well, there we go, and I think that was another really useful, that sort of thing there, because I get asked fairly frequently when people are like, how do I add that to the chart? And it's not the explaining that in words is 1,000 times harder than doing what you just did there now. So that was fantastic.
Simple, press Pine editor, select it, press it, save, add to chart, and now it's done. And incidentally, excuse me, like you said, it is easier to show. Now when I go into this F favorites now, your DMI, but I haven't got your. I haven't got it, have I? It's not there.
Yeah, if you hit the indicator button, yeah, you can see on the left, then you'll have my scripts. See on the left there, it says my scripts. Yep. Then it's in there, and you can then, if you like, hit the star button next to that, and it'll appear on your favorites.
So yeah, if I add that to favorites, when I come out of that now and then press the F button, that drop down, and then there it is.
Cool.
There's Rocky's DMI and where are you, buddy? There you go, Rocky's RSI and EMI, which is that one.
Right.
So now there's two.
So
if you don't want.
I am now gonna do something else. So I mean, it's now 1:45, so we'll come back to the Bitcoin charts in the not too distant future, and we will check in with how they're getting on with regards to your W pattern and the daily close and all that good stuff. If I can just, there we go. So just stretch that out a bit. Wasn't giving myself the full screen experience. So yeah, so we'll come back and check that out in the not too distant future, and I'll just take the next 15 minutes to take a look at Tezos. We had Robert online, hi buddy, coming in here and saying, have I looked at Tezos yet? Well, I haven't looked at Tezos yet, and for anybody tuning in, we'll be doing that at what's the exact time? So it's 1:45 at the minute, so that's cool. So 11:45, that's when that started. I'll have to figure that out in terms of timestamps later. Or an hour and 23 minutes into this stream. Yes, nice one. There we go. There's a timestamp. So let's take a look at Tezos together. And then, of course, as well, keep your ears peeled, Tony, for anything that I say which may require further explanation. But of course, as ever, you know, from one chart to the next, the techniques are more or less the same, you know, and what works on one, I will work on another. So of course, what I do tends to be the same across the board, right? So here we go. Let's take a look at where we've come from and where we could be going. I seem to have an anchored VWAP on the chart there. I'm just going to remove that. So there's a couple of ideas that we were talking about in the past. This is the 4-hour time frame with Tezos, and how did we do with regards to them? Well, we had this wedge on the chart. As you can see, this downward sloping green line. This is the 4-hour XTZ USDT chart, by the way, for people tuning in at the minute. And we also have in the background a pitchfork. If I just dive up towards the 2-day time frame, I can show you what that pitchfork looks like on a grander scale. Here it is here. And we bring up the options for it as well. So scroll on down, you can see that the style of pitchfork that is a shift pitchfork. And it's drawn in with the anchor points, just so you all know, down here on the lows at around about the 1st of July 2020, up to the highs on the 10th of August, and then down to the lows over there on the 21st of September. And the style is shift. And that's what's in the background. Anyway, here on, and I'll go back down to the 4 hour time frame again so you can see this wedge looking kind of nice and all the rest of it. We dipped out of it, came back in again. Now, part of the function of us dipping out of this wedge, of course, is the subjective nature of charting. And of course, if I change things to on you know, logarithmic, linear and stuff like that, then it can change things up like that too. So when you're at home doing your own charting, while it is important to get these things mostly right, okay, it's important to not just, you know, fling them on and call it real when it isn't. It's also kind of important to be slightly discretionary about how you look at these things. They're not exact price things. They're diagonally sloping lines that give you a good idea about the general core of the meat of the decision that you're trying to make. The actual intricacies will come in at different stages, and as you can see, we dropped down and came back up again, whatever. When we did break outside of this wedge, now this happened here, and as you can see, like I was just kind of qualifying, or sort of qualifying my chat there. Obviously I had that drawn in ever so slightly in inverted commas wrong, and again, this is another point when the time frame that you're looking at things really matters, because on certain time frames, some things will be wicks, some things will be bodies, and if I just wanted to use bodies only, for example, and just go through the wicks, I could do that very easily here on the 12-hour time frame. Now, nothing changes dramatically with regards to the overall schema necessarily, and that's why it's important for you to understand the general bounds of what it is to be doing pattern trading, and then operate within them, and to be able to do this and iteratively improve. Now, of course, one person's chart will be different to the next. That's kind of the art of trading, and I'll leave the art aspect up to all of you individually, but I hope I can give you a little bit of confidence when it comes to attempting to do this sort of thing without getting bogged down in the sort of the minutiae of the detail of it. Okay, so here we have this wedge, and we broke outside of it, and we had a measured move off the back of it, which is this orange line here. And what we see when this happened is what we had a couple of things happening at once. This big increase in volume as we went outside of that zone, and of course, if you look in the background here, we were also breaking through this line of the pitchfork, went on up the way, got our measured move. The bodies in terms of how this closed in terms of the 4 hours, yes, we got a little close up here, but as you can see, we never actually managed to close up above, close and open up above the median line of the pitchfork, right here where we had our measured move, came back down again. When we've tried it again at 275, we didn't actually successfully move past it in the 4 hour time frame. So this is, you know, this high was the measured move success completed. This movement back down the way and then subsequent resurgence was the failure to take out the median line of this, and then the move down the way again. And in actual honesty, you know, in all honesty, the way I had this set up beforehand was fine. Overall, just generally speaking, it was fine. We've come back down and we've retested this, generally speaking, retested the zone of where this wedge was with the subsequent move down the way, and found ourselves above this line, which I'd drawn in previously there at the 217 area, and turned around again at the line here, which is also the line on the pitchfork. Exactly. Now, regular viewers to the channel will know that I've not changed this pitchfork's layout in months now. The undo button doesn't seem to be putting that horizontal line back where it was. That's really frustrating, so I've had to do it manually because the undo button didn't want me to. That's weird, isn't it? Anyway, and now we've moved up again. Oh god. You know, there's this other thing, I'll just give people a quick tip. You can hit the lock button there, and then you don't move things around. That's something that I tend not to do.
Yeah, that's a real key. Because when you're moving your screen around, it's dead easy to grab hold of one of your lines or your charts and move it and not even realise that you've done it.
Yeah.
And then you go and you dip that line, and it was actually, you've moved it like $3,000 out.
Yeah, and you believe in it, you know, and you're sat there believing in this thing, and ultimately it turns out that it's that you've actually just tricked yourself. Anyhow, here we have this, and it's locked now in place, and we're currently above this line, which is at 217, and that line, that horizontal line that we talked about before, that's still as important as it was when we talked about it in the past, as you can see, and it's operating as such. And then, lo and behold, you know, 222, 22, 22, which is where XTZ was whenever I was looking at it earlier on, is where we find the body closes and opens in here, right on this little area. This is the 4 hour time frame. If I jump down to the 1 hour time frame, you'll see that we were in here, came down the way, came up towards the 222 area, and then boom, on past it. And so far since then, we've moved up to 230 again. Lovely to see all of the stuff that we've talked about in the past still, you know, having that relevance for the current time. What we have here then is a low compared to these previous lows. This is the 1 hour time frame at this stage. I've changed it over. How does that look with regards to the RSI, for instance? We can see this low is lower than those lows. So that's convergent there. Looking back the way compared to these lows, sorry, right, okay, compared to the most recent ones, convergent, that's okay. You know, we don't have bullish divergence at the minute, so you know that's not giving us a warning sign that things could reverse towards the top side. However, what if we just assume that overall this is an upward trend as denoted by the higher time frame? So going up towards the 12-hour time frame, just hiding all the drawings so you don't get confused by them. We have this low, we've got somewhere in this region we've got some high, sure, somewhere we've got some higher low, and then we've got higher high, and then we've got higher low, then we came in for a higher high, and then we've got this is this the low or is this the high? This is the question mark at the minute, because we've broken the 246 area. Is this overall period here that actually where the high is? And as you go up the time frames, it blends them together enough so that you get to like a certain point where it's hard to say that it wasn't just flux along the way, that we know really that we've got previous lows and previous highs, and that they're the significant ones. And yes, we've gone past this zone, and that's not great, and we put in a low overall. But during this phase here, how does this line up then with regards to during this think, Rocky, think and then speak. How about that? There's a tip for you. How does this work in terms of these previous lows and all of these lows just here with regards to the oscillator down below? We can see that this low here is lower than the previous ones that we had over there at the end of December, just at the end of 2020 here, before we flicked into the new year and went up at that point. So we're actually, you know, coming lower than this region here on the RSI currently without actually doing that in terms of the price. So if we did move up the way, we could maybe look towards this and say there's a degree of hidden bullish divergence on the go. Now, obviously, I'm stretching things out a little bit there with regards to that, and there's probably better regions for you to look to in terms of, you know, looking for ideas with regards to this current price action on this low time frame of the 1 hour, one of which being the MACD here, and seeing the bullish divergence which is present on the MACD as we've had these lows and coming towards the top side, and then kind of refocusing on aspects of like structure really and how we manage to handle things. And the next real big area for us remains as it was before at 252. We spoke about this in the past plenty of times, yada yada yada, but 252 is obviously a key area. Just as I kind of scroll over to the left, you can see the inflection here. That's at 241. Sorry, I've moved it down a way. You can see the inflection in here in that zone. Then here when we put in those highs, you know, so we know that it was, and this is kind of what we need to start looking at to go up towards the top side. That leaves us in terms of what we talked about with regards to Bitcoin, still in at that sort of 37,500 type region. You know, in terms of we've not really gone back up as high as where 40k is in terms of what Bitcoin's doing, and the same sort of mentality here. This is all positive. It's good to see, but currently we're really only down here at this point where we can easily look to the left and see these two lows right now here on the 8th of January. And the 9th of January, showing us that we've not really taken out this simple horizontal looking over to the left in this area, and we're just kind of gearing up towards the possibility to do that right now. So we need to see follow through, okay? We need to see follow through and momentum towards the top side. Otherwise, this just could end up being some sort of like dead cat bounce or whatever, and we might be you know, struggling to achieve anything. What in terms of, you know, candle patterns, and the most simplistic ones of them is really, you know, bullishly engulfing ones or bearishly engulfing ones. Have we got that in terms of looking for a reversal? No, we don't. Do we have a tweezer bottom? Actually, do we have a tweezer bottom? No, we don't. So we've not got anything, you know, not got like super obvious sort of candle. No, we're not got anything sort of super obvious candle patterns instead of saying that everything's super rosy. And as soon as we make up towards the 12-hour, we see that we're still in a red mode and below this green horizontal line. And that green horizontal line will surprise nobody as being the 236 Fibonacci. Now, this 236 Fibonacci is a historical price point, you know, in the past, and it's dictated the price action as we saw here when we came up towards those highs at that point. And of course, at that point right there, this is the sort of the 12. Yeah.
Just there, I just wanted to point out just there on the 4 hour or the 3 hour, but the 4 hour was where you were looking at. I think on the 12 just there. Oh, sorry, I'm looking at the other camera. Yeah, I can't see what it is that you're doing, but if you go to the 4 hour, are you still looking at TASOS USD? Yeah. 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 If you look at the end of the 4 hour just there.
Yeah, I've got that.
You can see that what would look to be an Adam and Eve or an M pattern, as if it's going to be going down. Yeah. Again, I just want to point out that would be invalid because the first part is lower than the top part, and an M pattern is a bearish point. So if that was the other way around, so the top peak is higher than the next peak, then that would be a confirmation. Well, not a confirmation, but that would be a signal to say that the trend is going to go down, and therefore either come out of your position if you want to, you know, sidestep over to USDC, or if you want to put a short trade in, then you could do so once you get the next candle over that confirms that it has definitely broken the neckline, and then you can put your trade in to say it's south. But at the moment, that is not an M pattern. It's not an Adam and Eve, because it's the other way around, so it's invalid. That's what I want to point out.
Nice contribution there. So Tony is obviously, you know, he's a fan of the M and the W, and there he's just given us told everybody that we don't have that this from the M idea is not textbook. It's not really. This is invalidated by this high not being higher than the subsequent one that we've got and in terms of what that would mean, you know, if you've got a high followed by a higher high, then that's obviously an upward trend at that point, right? Whereas if you've got a high and then a lower high, pardon me, that's indicating to you that you've got a downward trend. So then whenever you focus on the neckline of it, what it really means here is that you've gone up, you've come down, and then you've gone up again, and you're failing the market structure in at your previous point, you know, the previous important point, and breaking that breaks the structure, which can lead to further downside. And that's kind of how the M works in that mentality that you have there. And what we're seeing here is, of course, that we've found support at that green line, which of course then kind of, you know, the Gestalt nature of things, I wasn't really looking at it like, you know, from that point of view as I was kind of dawdling along. But then you pointed it out. Now it's hard not to see that, even though it's not valid. You know, it's hard not to see the importance of this green line as being like a neckline for us, you know, of one form or another. And we've not broken it so far. So that's good. Okay. But if right, we do this from here, and we fail to take out our high here, to go back to the chat that Tony had with regards to the M, what you would be forming would of course be that lower high. So while this is obviously off to the side, you could be looking at something like that happening and asking questions along you know, so that would be your next stage. So now, so that's how you tie these things together. You know, you identify that this is not working, but then you think, okay, so we've got this area just here. If we bounce up from there, that's great. What's the key thing for us? And the key thing for us does come in there at the 280s, and or else, you know, or else we're looking for either we're going to maybe consolidate for a while. Maybe we're going to do something entirely different. You know, for instance, come in here and put in I just did that slightly wrong, but if we put in a higher low at this point here, then of course, you know, you're looking, and a higher low at this point here, then it turns into a W, you know, and it's that type of idea. And what does it boil down to? Well, of course it boils down to pattern trading, right? So you mean, you're talking about patterns, etc., etc., etc. But what is it like? Is it really fair to just say that that's exclusively from the realm of pattern trading? I don't think so. I mean, you're looking at market structure, you're going to be looking at the volume, you're going to be looking at so much. Did I miss something there? Oh.
No, I was agreeing with you. But if as that pattern increases in the validity, I think that's the right word. Yeah. Validity, you see the volume drop right off, and the fact that measured move that I showed you, where I cloned the neckline, I wouldn't expect, if the volume is declining right off, I wouldn't expect it to reach the full measured move. And I might not even trade it if the volume's diminishing right off. So volume is key to pattern trading.
Okay.
I strongly relate them two together.
That's the volume down the bottom. When Tony says volume, he means what he's talking about here is looking at this stuff at the bottom, right? And using it as a way of saying that you've got either confirmation, or you've got what's the opposite of confirmation? Denial, sort of thing. Failure. That would be it, I guess, in terms of trading. So that's that. Right. Okay, cool. Nice one. Thank you for pointing that out, Tony. Yet again, cheers, valuable contribution there. And I was pointing out at the time that beforehand that we had this previous Fibonacci retracement, and that the 242 area that we're kind of, would be our next target towards the top side if we continue past the 230s and don't fail and go back down towards our green line, etc. is going to be that 242 area. Or is it? It was previously, but we know that we've had this subsequently, all of this, our low here. We actually had this wick down the way, which of course was in terms of the price was quite crazy, going all the way down to sort of the 150, 160 area, whatever that is. So where does our 236 coming at now? And we find that we've actually managed to stay above it. So that's the difference between, what a difference a lower wick makes. This is a failure of this Fibonacci right now, not looking so great, yada yada. Move this into the exact, to the correct place where it should actually be at now. And you see that we haven't done so quite yet, which opens up. Now this doesn't line up perfectly in terms of like that that stack of perfect lining upness that we talked about earlier on when things are all lovely. But what you're left with here is this zone in the middle where you're saying that going down below this green line here, going down below this green line, that green line that's there that I'm looking at, going down below that green line is obviously significant in and of itself, but you're putting you back into the danger of asking questions about this, etc., etc. And that's when you're going to have to ask yourself, whether or not moves are sustainable. And that zone is going to be, like, we can call that the sort of the 220s zone. So being in the 230s is good. Obviously it's not ideal because we want to see it at $3. But it is good in the sense that it's a hell of a lot better than below the 220s, where things actually start to look a bit stinky. In terms of our recent targets and whatnot, I would like to point out the fact that the prices came up towards 295 and did this thing that we're talking about. Now, I did talk about how there's this, $3 as being the target, but it's always wise, not always wise, but it's generally speaking fairly wise to look at just shy of that and that sort of thing. And there was various other reasons why 195 or 295 is important. What were they? I can't remember at the minute what they were, but I know that we spoke about that sort of a number in the past. Maybe I just said it as opposed to saying $3. Whatever, who cares? Anyway, we came up as high as that in that move up the way in terms of the wicks. But in terms of like getting positive on this one again, I don't need to be as high as that high up there wick. Instead, I'm looking towards 276 really overall. And there's a couple of extra things we can do now. We know this is the significant low, I suppose, here where I drew that down to previously. And that's, of course, that wick was that significant high. And where does our 618 come in at then between this point and this high? Just to kind of assess how far we came. Or in another way of putting it, had we drawn this in when the charts, if I just use the replay button, looked like this, excuse me, that's maybe not so great, because when the charts looked like that and then suddenly it goes crap. You get the point I'm making. Had we drawn in the Fibonacci and thought about this speculatively, as we so often do on the channel, had we drawn it in here up towards the highs and said, look, this is potential to operate as a turnaround. What are we looking for thereafter? So this is what you would have done in the last couple of days when you're doing it. Well, you said, well, if we do move down below that 236 and we actually do it with a degree of gusto, now that would maybe include really high volume in the one candle, or indeed opens and closes across 4-hour time frames and the like for the downside, then where would be looking to, and what would the target be? And it'd be in there at the $2 area, as we saw it came right down to. That's where the 618 golden pocket is. And in fact, the 618 golden pocket went between 211 and 207. That would have been fine to have taken any profit on a short in that zone. Looking down as far as $2 flat would have been a bit greedy. We saw it came down as far as whatever that was, $2.05, a little bit beyond the 618, but back up again in a sort of approximation of good but not perfect in terms of all the bots and whatnot, and how they were pushing the prices around. So this has happened now. Okay, so it's now historical. Our closes, on the other hand, stayed above the 50%. So we're getting everything, all the pieces are in place there to say, well, I'll leave that Fibonacci on, I suppose, for now. But we've managed to come down, fulfill the need of moving down as far as this in terms of typical Fibonacci theory. We've now gone back up in terms of our closes. We fulfilled the need in terms of Dow theory, which essentially boils down to saying, Dow theory's got a whole load of facets to it. Let's not get into what it is. It's not extremely complicated because it was published in a series of little editorial pieces that he put out in the Wall Street Journal. So it's not like it was a huge Bulkowski textbook. Instead, it was like several articles where he talked about the general theories of trading and things like divergence. Again, I often talk about this as that there's only seems to be a few hundred words in the world of trading, and they all get used multiple times. When Dow talked about divergence, what Dow meant is that you would see divergence among normally fairly related industries going, where maybe, say for instance, steel has gone up loads, but the railways are falling, and you think, oh, there's divergence there, and the idea kind of being that loads of steel got put on railways and sent off the way. Why are they not doing so well? Why is steel so high? Maybe we're going to see a decline in steel now, and that would make sense if there was like less future orders, yada yada. You get the point, right? So divergence among asset class, higher level stuff, as opposed to divergence when you're looking at that, whatever. Anyway, right, so Dow theory would have you saying that we come down towards the 50% area and find our feet again, and the 50% area comes in at around about where we saw the 236 at on this Fibonacci. So for us to remain, then there's this Fibonacci theory, right? But if you're talking about it from a Dow theory point of view, there's significance to going on beyond the 50%. We want to see the bodies closing above it. What would they be? Well, I can add to that by saying that from a Fibonacci standpoint, then at this point, you're going below the 236 here, which lines up perfectly with that 50%. So in terms of, like, again, rather than just at any arbitrary point in the market saying buy, sell, is it up, is it down, you find key areas in the market. This is this one here for Tezos, and let's hope that the prices are able to sustain themselves at least into the high 20s and 30s for closures and whatever. If we do go down the way, then there's other areas. Our previous low comes in at $2, and that's what we want to stay above, the 196s. I would hate to see it go in there again. This is it make things a bit of a chore and whatever else, but sure, it could happen. I want to see things just continue on the way, because this could potentially be overall an upward trend. Let me point out that we've got this high in at this, at the 24th of November. The high that we had then there on the 11th of January is indeed higher. The volume continues to go higher. It's not bearishly divergent. Things are overall looking fairly decent in a market which has had a big decline. Whoops, just moved that. Where was that actually? Which has had a big decline. That was in there at 242, 240s again. Whatever. It had a big decline. Took a long time out to kind of sort itself out. It went to rehab. It went to the Betty thingy clinic or whatever. Put in a bit of bullish divergence on the bottoms. Had this stretched out price action where we did come down in terms of wicks, take out previous lows, but in terms of body closes, never did so. Managed to maintain the overall upward trend in the face of volatility, allowing us to push out our Fibonacci retracements, which we drew in wick to wick, to more extreme points, whilst overall staying within the confines of the, almost perfectly within the pitchfork, which was from our significant low, which was in the run up before we had the divergence. Just as, by the way, this is our significant low, came in here. Subsequent to that, we've had the divergence during this period where the pitchfork's drawn out at, and all of the confluence really comes together to give you, this is what's happening in the price is for this asset. So if we see more pain, it wouldn't be much of a surprise, because we've had an awful lot of that overall. And if we see lots and lots of joy, again, it wouldn't be more surprise. So we have to look towards our next levels up and say that it would be realistic to be taking profits in at those areas, and not kind of languishing in there looking at your account being in profit and not doing anything about it, if you plan to sort of swing trade this to an extent. And your next significant swing then towards the top side, if you're looking for that right now, is going to be in at that around about 350 area. Would I actually go for 350? I've already said it during this section of the video. Would probably better to shy away from the exact round number itself. The 6.5 Fibonacci retracement point is actually, in terms of the golden pocket, it ends at 348. So let's be honest and say that somewhere in and around about where we have this area of the pitchfork is probably the ideal point to look to. Now maybe be more like 331, and there is an area of increased risk for loss, but you could keep some of it. And I'm not a financial advisor, none of this financial advice. Sometimes I go too far. I need to kind of qualify what I'm saying. By the way, if you ever hear me saying I'm not a financial advisor, this is not financial advice, it probably means that I've kind of gone too far with the TA. But there you go. That's where you'd be looking towards next, in a sense, if you were to go up towards the top side. Now, if we saw a reversal at that stage, I wouldn't be shocked or horrified. It would be nice to get a big run up the way and just keep on going and be parabolic about things. But we've discussed this with the dangers of parabolic price action as we've seen in the past. Let me just point that out. Instead of going to a different chart, how about just point out here with regards to TESOS, what does that look like this year with the parabolic thing? It leads to problems. It can lead to problems. This year less so, but still, it had a good stage of this parabolic effort there. So, is it a bad thing to see this? Well, we're getting a big stretch on the prices, giving everybody second chances to get, a second bite of the cherry. When you missed it here, you missed it here, you missed it here, you missed it here. You never get to miss it. You can take a back seat, go on holiday for Teslas, come back and trade it again, and everything's still fine. A couple of weeks later is what it looks like at the minute. But, if this continues, then great. That's your Teslas technical analysis. Dropping below 220 is going to be an issue, but if we ultimately if you were shorting it, you could be looking down towards 150 as your target, by the way. Like, for the people shorting it, this video isn't necessarily even really, nobody really is tuning in to short Tezos. I don't think that ever watches this show. But the first thing you're going to be looking to is, of course, taking out a previous wick here at that area, breaking the $2, breaking past the 618, going back down to west where our wedge was, going into this lower warning area of the pitchfork, and etc, 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 and taking out the 786. And if you did that, then what you're doing as well, really, if you by taking out this 189 areas, you're taking out a previous low in terms of body closes and this low here. And of course, you probably would be at that stage burning, if we pushed on down further, then would we come in with bullish divergence yet again at this point? I wonder. But if this trend continues of us coming down and touching this lower line on the if we do this, if this happens a third time, then I don't know where that price point could take us to. I'm not going to make predictions off the back of it. Just say there's a warning there for people. In terms of if you are shorting this, then what you're doing is ever so slightly counter trend in terms of what we've seen over the last, well, really essentially since, let's call it the 1st of November last year. But if you're looking at it from a really broad point of view, then it's understandable that you might think that there's more downside, what with this being a low and this being a lower high. But as soon as you stretch back out the way, you can see you got your high, your low, your high, your higher low, your high, your higher low, that's a higher high, your higher high, your higher low, anywhere in this area, and you're fine so long as you stay above that 140 area. And if I was shorting it, I would not be being greedy beyond that point on the broad term perspective, because this is of course an asset which essentially ever since it was listed on whatever this is, Binance I think, has been in an uptrend. Just you have to kind of find your viewpoint to actually see that at times, because this has been obviously dreadful for the last 6 months. Okay, that's really that's 12:15. So unless you've got unless there's anything we've been talking about there that we should address, which is cool, I could take my screen off and you could show us how things worked out with regards to the daily close on Bitcoin and whether or not we saw your pattern playing out, etc.
Okay, yeah, that'd be great. Thank you. If you can bring up my screen, as I say, I can't see whether my screen.
Yeah, you're good to go now. But your screen's up now.
Yeah.
Cool.
So, first of all, I want to say that I noticed. I mean, I drew this in as you were talking, and I'd finished. I drew this in to show that I recognised earlier that I'd made the mistake about a minute after sort of letting you back to speaking again. But first of all, I made the measured move from the low of the first part of this W pattern, and then the measured move from there to the shoulder, and then from there to there, and I said that's where it would end. But my mistake is that I should have made the measured move from the top of the from the bottom of the top of the bottom of the second half of the W, and that did play out, and now it's obviously rolled over. So you could have taken your profit there instead of there. So it would have been a bad mistake, but there you go. So I just want to reclaim my misinformation there, and apologies for that.
Look, Tony, by the way, you did a pretty good job of introducing that idea to people, and everyone, caveat emptor and all that, buyer beware, everybody. Let's just be very clear. I've invited Tony on here to talk and because he's a good friend of mine and all that, and he's very, you know, he's a good educator and everything too. But I mean, seriously, cut the guy some slack. This is his first time doing a live stream or whatever, and so like little things like that will happen. It's totally fine. And anything that anybody says, I will be the first person to tell you who you need to rely on as a trader. It's not me, right? It's not me, and it's not Tony. It's yourself. And doing that is going to be your greatest asset ever. Now, it's also not anybody else you watch on YouTube, and I'm not bringing anybody down, and I'm not bringing myself down either, or Tony, by saying that. Is that I rely on myself. Tony relies on himself, and you will rely on yourself when you are on that path to success. In the meantime, taking, you know, signals from a video on YouTube, or thinking that's what somebody's saying when they're talking, you know, they're just trying to communicate a message live to you in a you know, and trying to put together something in the awareness that there's people watching around the world and it's being recorded and everything else. Yeah, you know, you're going to have to cut them some slack, right?
This is the thing. It's there's I know there's what is there now, as far up to right now, there's 38 people watching. I know some of them on here, because I know a lot of them that have commented, are actual traders, so they're trading shorts and longs, which means that when the market goes down, they can go onto the platform and bet. Instead of just having the coin, they can bet that the market's going to go down and gain money from the bet. So that's just like going to the bookies and putting your money on the horses, as it were, but with a little bit more, what's the word? A little bit more confirmation as to whether the ball is going to land on red or white. It's red or black. It's not going to be as simple as that. You've got a little bit more. But there's more danger. But I also know that from the people that are commenting that there's a lot of hodlers on here. So these are the people that are buying your Bitcoin or some altcoins that they've been told that are going to be a good choice. And all they want to do is hold on to them for the day that when it gets to a real high amount, they can cash out and, you know, pay off their mortgage or buy themselves a nice car or whatever. And at the moment, we're at this pivotal point where everyone's worried and wondering after this big drop of Bitcoin, what do we do? Where do we put our money? Where do we go from here? So it's obviously it's getting late now, but that would be something that I would want to be as a hodler rather than a trader. That is something that I'd be wanting to know what's the safest thing to do at this point. And in answer to that, for myself, is again exactly what Rocky's just said. And that is that nobody can tell you what to do. It's something that you've got to do yourself. If you're in the game, then you're in the game. You've put your money in, and you need to be responsible for your own money and what it is that you've done. Now, this is where putting more money in than you can afford, like taking money on a credit card or getting a loan to do something, and start messing around with trading platforms that you don't know what you're doing with. All these things are really, really dangerous. Because at the end of it, you might lose all of your money because you press wrong buttons really easily to do, get your account wiped, and then you're left with a £10,000 credit card or loan. So only put in what you can afford to lose. And if you do lose it, you just give yourself a slap, and then on your next payday, you can put a little bit more in. That being said, that being said, I suppose I've got more that I'd like to say, but if I do say it, then I've got the responsibility of you doing what I say. And if it doesn't work, like that trade didn't work, just ain't quite right, it didn't quite touch that where I said, because I made the mistake, then I'll be getting you all throwing eggs at my window. So yeah, you've got to do what it is that you feel. So do your homework, do your research, join the Discord. Rocky is there, I'm there on the Discord, all to answer your questions. There's Nyron, who's happy to answer a load of stuff. There's Trade Spotting, who's there, and all these guys are all really, really helpful, and they'll go above and beyond. And it doesn't cost you anything if you don't want it to, but there is that little jar if you want to do a donation, because Rocky does this for nothing, it's free. So it's good to have the donation, and for his algorithm, so that he can grow, because you've got people like Crypto and all the rest of them, Crypto Jack, they've all got all these thousands of subscribers, but they don't give out the information freely as Rocky does. and I think that he deserves at least likes and subscribes and some donations where you can. So that's probably everything that I can say for now, really. Rocky, I'm privileged to be on the show, and hopefully I'll come back another time at some point in the future. Yeah, but yeah, really, really privileged to be here. Thank you very much. And yeah, I've said everything I need to say, so I'll hand it back to you. And hello, 39 watchers.
Thank you so much for saying that. No, I really do appreciate that. What I I care too much, right? I care too much. I like you all too much. You know, I really genuinely want the best for you to all too much, to the point where it would concern me if I wasn't doing my very, very best to help, you know, to the very, very best of my abilities to help you as much as I can. So is that too much? Yeah, I recognize that I care too much, and that you know, or whatever. So in many ways I shoot myself in the foot, you know, that I put so much concern into giving out as best quality information as I can for free on YouTube, without anything. I care so darn much, and yeah, maybe I shouldn't so much, but here we are. So take advantage of it while you can, like, okay, and wow, there we go, fantastic, that's brilliant. Didn't show up on screen. I think I must have my my alert box not showing up. No, I'm not gonna let that go by without getting it's showing up on screen. I'll just play that again.
It's all things like that, though, because this is your job. This is what you do. You're not you don't go to work in a warehouse in the day. This is your job.
Yeah.
So that donation just there is great, because loads of little ones like that, they add up to a wage for Rocky. Yeah. And that to me, that's, my heart goes out to Robert. Thank you very much. And I don't even get any of it, but thank you.
I'll buy you a pint whenever I see you, Tony. But that is it. You know, it's like I want to do this for, well, I mean, conceivably forever. And yeah, I mean, I'm not going to tell anybody they have to do any donating or anything like that. But you all saw it. You all know how much this means to me in terms of a validation of the work that I do, you know, and then in terms of how much it means to other people that tune in. It means so much, and it goes unsaid, and people don't necessarily realize that. But you know, I'm putting out this content here, and people can see that somebody put in a donation means so. It means it's worth paying for, right? You know, and it is hard in terms of capturing people's attention to show that you're worth looking at. You know, compared to the likes of the Moon, for example, who'll get multiple thousands of likes on every one of his videos. You know, this video will end up, I mean, how many likes do we have right now? We've got 30 likes, you know, so I've got something in the region of you know, I don't know, many times less than what the other people get in terms of their videos and stuff. So it's hard for the YouTube algorithm to know, and it helps other people.
What I don't get though is you've got 38 people watching and only 30 likes. So you've got at least another.
There's 8 cheeky people out there. Blue Collar Baller has become a member. That's quality. You'll recognize Tony from also being a member of the channel. It means a lot. I mean, you can tell the quality of the channel speaks for itself when you can see in the comments there the amount of members and the donations. It really does help. Not as much me right now, and I massively appreciate it. I mean, it does, you know, every single bit, and more the, you know, motivation and everything. It helps loads with all of that. In the future, it will help a whole load more whenever there's whatever. You get the point. It's not really for me. The biggest help that this does for right now for anybody is that the casual viewer who tunes in and sees that this is going on thinks, right, this is actually worth watching, and honestly, it is. It's hard going out there in the world of crypto trading, in the world of any trading. Crypto, just that level up in terms of how hard it is really to do it well, and then to find somebody on YouTube who's talking about it in a way that's useful is even harder. The amount of hours that you have to go through watching people who don't care about you like I do, which is too much, right? And who don't want you to learn as much as I do, which honestly again is too much probably, but I can't help it. It's just who I am, and it won't change. Every time I've tried to bring it down a level, I've failed and just gone straight back to type. I can't help it. I care about you too much. But for the amount of people that they have to go through and hours and days they have to spend watching other YouTubers do the thing before they find this channel, and it's got 2011 subscribers or whatever, this wee channel, and they think, well, this content here is not going to be as good, but it's better, right? So they need to see that. They need to see that, all that good stuff. Anyway, and I recognize 9 out of 10 names that come in here. I recognize them. I mean, like Thunder Bug Creative. I've been around a while. Rocky is the most underrated analyst on the internet. Both as tech knowledge and especially in attitude. For technical analysis knowledge, yeah, and an attitude. I mean, that's amazing. That's amazing, right? Right there in the comments. And I recognize your name, and I recognize most people in here at any given time. I've spoken to them loads. I mean, if you were watching from the start, you saw how I had that joke where I was wearing 2 jumpers in my previous stream to just do a joke with 3,000 trin, and you didn't even tune in to see it. and that, so I care, right? And obviously that's not scalable to the point where I would necessarily know 100,000 people's names individually or whatever else, but I certainly intend to keep going like this, and I'm glad you're here. But the biggest, who donating a $5 to me, massively appreciate it. Becoming a member, massively appreciate it. It's not going to change my life, okay? I massively appreciate it, but it's not going to change my life. What will change, what it might do though, is change somebody else's life who happens to tune in and sees that the content's worthwhile, and that means a lot to me. And then down the line in the future, whenever the Patreon stuff kicks off properly and everything else, that it gets to the point where I actually can say that I'm a YouTuber as opposed to a trader. Because if somebody asks me what do, I say I'm a trader, and then if I want to talk about something that they actually get and understand, then I talk about how I also make videos and put them on YouTube. I still don't actually really call myself a YouTuber, right? If I do say, I make videos, I make videos on YouTube. But at some point in the future, I'll become, I'll get enough money back from this that I could call myself a YouTuber, right? Anyway,
you know what Da Vinci did? He's got his own thing. He's got his own top, hasn't he? That he wears. I told you so. Da Vinci J15 or whatever. You'll be able to go around with your own rookie top.
That's what I should do. Yeah, that's what I should do. Yeah. Right. Okay. Now I'm aware it's after midnight. Tony's in the UK, and I don't want to keep him up all night, okay? But I still have 2 coins that I'm going to look at here in the show, right? So I'm going to take a look at Ethereum, and I'm going to take a look at Chainlink. Do you want to stick around for them as well, Tony?
Yeah, I'll stick around until the end.
Oh, brilliant. Excellent. Right. Fantastic. Well, I'll try and do it a bit quicker. The technical analysis that I did for Tezos lasted for like about half an hour. Okay. And obviously, it went really quite deep and everything else and all that sort of stuff. Need Rocky coin, by the way, says Nav and Ethan. And occasionally, by the way, you'll see me smiling as I read the jokes and stuff that people are putting in there. I'm not reading them all out, but I'm reading the chat as it's going along, by the way. Really do appreciate all of that stuff. Like, and you're all welcome, by the way, to everybody who's been saying that so far.
Hey, there we go.
Wow. Fantastic. Thank you so much, guys. Thank you so much. Right, that's fantastic. Anyway, yeah, let's do it. Let's just move on and take a look at Ethereum and Chainlink, and if those guys who donated or became members want me to take a look at a specific coin, then give me a shout and I'll try and do that, and then let everybody get some shut eye. Michael John Scott, by the way, or John, by the way, for everybody who's in here, I do try to get to know your real names and all the rest of it. Occasionally I'll forget them, etc. But yeah, anyway, yeah, if you tell me your real name, then I'll get to know you personally and all the rest of it. But anyway, yeah, nice to see you there, Michael John Scott. Rocky, I feel you would create.
That's where we need to be, you guys that have joined today. Everyone that's shown the support today, you need to download Discord and then join up. Look on the scroll down on the page here, and there's a link to the Discord. Join up there, and that's where you can speak to us personally, and we can answer your questions.
Yeah, Tony's in there as well. I mean, and again, by the way, just to be very clear, we're not in here shilling anything, right? We're trying to create a community. Well, let's be honest, we've already created a community, right? And it's a fantastic community. And if not a single more person joined it, I wouldn't love it any less or whatever. I already love the community 100%. So just so you know, that's like, I'm already at maximum. And that's because it's really good. And then we're telling people about us in general as a good community because it's good and we're proud of it. And that's it, really, you know. And I'm proud of Tony here as being a part of the community, and I'm proud of other people. So that's what that is, right? But you don't have to join it, and it's not because when you join it you'll find a bunch of crap in there. I've not got some marketing funnel set up saying, "Oh, join this free Discord community," and then I start piling sales stuff at you in there. That's not what it is. It's about the community, right? And that's the bottom line. Okay.
Just one more thing, Rocky, and then I'll keep you stum because I know you've got a blitz through. Yeah. Is Rocky mentioned earlier on is that every Monday, most Mondays, I shouldn't say every Monday, but most Mondays at 5 o'clock UK time, so GMT, for an hour, sometimes an hour and a half, 2 hours if it's we're having a good time. We all go in on a live chat, and everybody, regardless of their level of understanding, can ask questions. They can show what research they've done, bring things to the table, and it really helps you to develop and become a trader for yourself, so that you don't need to go onto YouTube and check out where your trades are going to be. You'll be able to look at the charts yourself, like Rocky keeps saying, become a self-reliant, independent trader yourself. You don't need anybody else to check your trades for you when you get to that point. So Mondays are really, really, really good, and they're free again. So yeah, Mondays 5 o'clock, Neverland chat.
Yeah, and you know what as well, just for full transparency, because I'm 100% transparent. By the way, you'll notice if you're in the Discord that occasionally as well I'll copy and paste the emails that people send my Gmail off the back end of the channel when they're trying to get me to do advertising and ask for people's opinions and stuff like that. I mean, for instance, this channel could be getting sponsored already by various people, but we decided it just wasn't good enough, basically. So we kept on doing it for free. I don't know what the mentality is exactly behind that.
Yeah.
Right?
Yeah.
So anyway, we just kept on putting it there for free. Anyway, yeah, there is one at the minute. I told I talked about it recently. Not recently, 8 months ago. Some gambling site came along and got in touch with me, and I wrote back to them and told them that they'd need to give me more money or whatever, because this wasn't. I actually wrote back the first time and said it's not happening. Then they got back in touch with me and says, "Come on," and I was like, "Well, make it." Money I can't refuse. So if at some point in the future somebody does that, then you'll know about it and I'll tell you. Anyway, why am I even talking about that? I don't even know why I'm talking about that. Let me move on to look at our other pals there. We'll start off with Ethereum, I suppose, since it's the next big daddy coin, and then we'll take a look at Chainlink. Right, cool. Okay, so this is let's go down to the 24-hour chart and zoom on a wee bit. What's that nonsense? I'll get that, remove that off the screen, whatever. So there's a little bit, I don't even know which one of the particular exchanges this is. So this is not the chart that I've been using recently, it seems, or whatever, but that's fine. Let's just build this one up again. Oh, what have we got here? Another thing. Dennis. Oh, by the way, Dennis, thanks so much for joining for that 444 quality. That's really good. Really, really awesome of you. By the way, for people who do want to donate and all the rest of it to the channel, there's an option to do it through what's that stuff called? Cryptocurrency, and the other stuff, PayPal. in the thing below. If you know how to use cryptocurrency, I don't know, it's a bit beyond me. Then you can find the link in the description. Anyway, I don't know. It's super complicated, man, isn't it? I don't know, all these numbers and stuff. I don't know. It's weird. Anyway, let's take a look at this thing. But right, let's take a look at this. If you want to, you know, like we've there's plenty of things that you talk about in videos on the internet, and one of them is this idea of building up a chart. You know, like just how would you go about making a chart, you know, going from a blank chart to something which means something. I kind of want to leave this one because of the memories of the Hey Pal Zone. If anybody was watching during the summer with the Hey Pal Zone, that was all funny and everything. Let's move on though, shall we? I'll just destroy the past and move on to the future by just going like this and just clean it out. Right, okay, so we've got an empty chart here, completely empty chart. Let's take a look. So we've never looked at this, you know, just like fresh. How would we go about doing that? And that's how we'll do the TA for this one. And hopefully that'll make things relevant, but not necessarily need to go too deep a dive because I've kind of cleared off some crap. Well, we know in terms of the markets in general that the 12th of March is a really significant low. Oh, I've lost you, Tony. Oh shit, I'm not on my screen. That's why. Ooh, okay. Right, so all of my chat there was completely, there we go, there's my stuff back. Sorry about that. Well, you didn't miss out on anything because because I went ahead and deleted it in the end, didn't I? Anyway, so we've got this completely clean chart here for Theory Bobs. And the I think I've lost Tony. I think I've lost Tony for now. We'll get him back at some point. Right, anyway, yeah, so you've got a completely chart here for Ethereum, and we know, like, in almost anything that we happen to be looking at the minute, that the 12th of March was a significant low. And because I'm so zoomed out here, it's kind of easier to just use the anchor tool to get us in there for our low, and then I'll take it off and zoom on in and make sure that it actually got the correct low for us, because I like to draw these in wick to wick. Now, when you're using Fibonacci, you should be choosing to go wick to wick or body to body, not a mixture of the two. There you go. And you always do it left to right, so there we have it. And this is not too dissimilar to what we're looking at with regards to Bitcoin. Okay, so if you were watching the Bitcoin section, you're familiar enough with little key things like where the 236 is coming in at on this particular Fibonacci, and that lines up with $1,057, and we're below that right now, okay, in terms of the current prices. The current prices, by the way, have been as low as 1,037 today and as high as 1,090. I guess that's perhaps since midnight, is it? Is that, you know, this is just this tiny little bit of a range here, yeah. Whereas yesterday the prices went all the way down as far as $916 and have subsequently moved towards the top side, giving us a more than 10% boost back up the way, just again like we saw, actually 20% near enough as we saw with the chat with Bitcoin. So we've had this big drop down rejection sort of style wick on this one, but it's easier, and sometimes it's hard to say because, you know, sometimes a wick below a candle like this would signal further downside. That's what it get. If you go on for instance, put on the all candlestick pattern thing on all patterns, right? Put that on. This might give us a lower shadow candle. It didn't do it there. Is it going to give us one? Have I got the inputs? Where we got them? Long lower shadow. Is that going to give us that for that candle there? It's not. Anyway, long lower shadow. If I just hover over this, you can see long lower shadow. To indicate seller domination of the first part of the session, candlesticks will present with long lower shadows and short upper shadows, consequently lowering prices. Okay, and as you can see, the prices in terms of this example just continue towards the top side. So it's not that perfect, right? So looking at candlestick patterns, that was the point I was trying to make, so I could just, you know, remove that again. It's not that perfect, and it's debatable at any given time exactly how it goes, but you'll find people who are really entrenched in their own position when it comes to looking at wicks on candles. Let it be said that what you really kind of should do is ask questions about what it meant by doing this. And we can look over to the previous wick there, see that the price has moved up above it. We can see that it's above the 236 in terms of our body currently, you know, and where we closed yesterday was above the 236. And these sorts of things give you the impression that, you know, so long as we're able to hang in at certain areas, then it could be good. But if we don't, and there is a statistical likelihood, I suppose, that you won't break the 236 on any given particular proper Fibonacci, and this is a proper one drawn in from those proper lows down there on the 12th of March. I mean, this is, I wouldn't even bother debating with anybody if this is a valid one. This is, compared to various other places where people might potentially draw them in from. Then we're looking here, and this is, if we do, you know, continue to go towards the downside, then we're looking at three potential targets really right now, and they come in at 870, 725 and 555. Okay, those would be your three targets that you'd happily look towards. How would that, all form up, and what are the two most significant areas? Again, just kind of relating this back to when we talked about Bitcoin earlier on, we talked about Dow theory and the 50% area, and we talked about the 618 as well, and the importance of these kind of areas. And we can see that these are these two levels here with the 723 and the 555 area. So if we did come down here and push on and close below 10,055, we almost certainly would be, when I say that, I mean 80% of the time sort of thing, we'd be going down at least as far as 875. Okay, so all of these things are talking huge discounts in prices. So you're talking like, whatever. It doesn't take a mathematical genius to know that 10,055 down to 8,086 is money. There you go. So, and then on the way down the 50 and the 618. But what do we have at the 382 here? Just to put things into context properly, is a complete lack of support or resistance, historically at that price level to give you any sort of cause for to think that there would be, just in advance, the statistical likelihood of us actually stopping here at that area if we did go down is rather low, given the fact that there's not very much there. If I go over to the left, and by the left I mean completely off this chart and onto one that's got longer price history, I could potentially find something, but no, not within the last couple of years, right? Just kind of looking back that way. So that's, well, obviously where we are. So if I go down towards the 4-hour time frame, what does it look like? And suddenly we do see something in here with the 236, and that's this wick in here, of course, with regards to this price movement. And we'll come back and revisit that section in a second or two with regards to how high we got with the price action. But I'll just remove that from the chart just now and go back up towards the 24-hour time frame and reiterate the point that if we were to take out therefore this wick and close, significantly moving on down past this zone, then you're clearly looking towards these two zones, and it's easy to see then at these two why there's decent, inflection in the past, such as in here at 725, where we had this at least spent a period of time thinking about things, unlike here where it was just a wick, and we had this same concept, we came up and down again. This was real, this was real, this, not so real on that sense. So that's kind of, where we were and how that all lines up if we were to go past. And that means, closures below. And 1055 is a bit kind of mean in a way, and especially when we see these two wicks here. But we need to, and this is a 24-hour time frame, just to bear in mind that you need to see some decent sized ones. So if we jump down towards the 4-hour time frame, you can see that we did get a few closures below it. It came down, it was a red candle, we had a doji and a green one that brought us straight back up again. So you can see that, like for instance on the 6-hour time frame, we didn't close any below it. So we're looking for proper decent break in this thing, and that's not happened yet. All we've done so far is come in and test this previous level and ultimately actually put in what is conceivably a higher low, and that means that you're looking down here and saying, well, if this Stochastics came so low compared to where it was previously, and the RSI came so low compared to where it was previously in all of these previous downward movements, it managed to push the price down, or this is where the price was before, blah 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 blah, and here we are, and the RSI and Stochastics and all the rest of it much lower, but we haven't got that here. What's that? That's called hidden bullish divergence. That's continuation divergence. That's so that's what you're looking to there, and that could be the saving grace. So if we get some nice volume coming in, then maybe that could be good, and we're looking up towards our previous highs now. Of course, the key areas are going to as well be in around about the sort of 1,200 and whatever area. How high did we get? 1,356. We're so close to going in for that all-time high, but we didn't actually get it. We're just shy of that. But all of this is operating in that top area between the 886 and the 100% of the all-time high to subsequent massive major low Fibonacci retracement. We're all in that zone, and until we go past either of these, then that's the story that we're looking to at the minute. So how high did we go if we didn't go as high as the all-time high? So if we just allow me to indulge me to go back in time to what I was saying before, how I would look at this area just here where we had that wick. If I did it on a lower term time frame, then I could get a low and a high in all nicely to show you how it lines up. We'll just do it on this one candle. Again, that's not really how you're supposed to do Fibonacci, but just quick preview. You know, if I had have wanted to, I could have done it this way using the green wick and the red wick and yada yada yada. But it's the 4 hour time, on the 4 hour time frame, that just looks like one candle, etc., etc. But so just so you know that I'm not talking at my arse, essentially. Where did we go as high as? Well, we went up to the 1618. Didn't get quite fully there, but we got pretty darn close. I mean, the highs got up to 1360, and the 1618 was in there at 1373. So I'm not going to, like, you know, go to war over the case over $13 whenever you've moved up all the way from 880. You don't start, you don't start complaining about having not got $13 on a move that came all the way up $500. You know, don't be crazy. So we got up towards that area, and then we saw a pullback. So all of this is all happening within the realms of normality. And where do we see ourselves with regards that? Where do we see ourselves? In 5 years' time, where do you see yourself, Rocky? No, in terms of this price action, where have we come down with regards to this Fibonacci? Well, we haven't taken out the 236, and that comes in there at 954, and that's the difference between when we're on the 24-hour time frame and looking at the 236, which is now here where the 618 was of that previous move. By the way, on this one here, this is where the 236 is, more or less, is well less, I suppose, by like $20, but there you go. Like, let's again not go to war over 20 or 15 bucks, right? Then this is, this key area, and when we saw it dropping down below but not breaking it in terms of these candles at the 4 hour, etc., what it was doing at the time was coming down, wicking off the 236, coming down here with this doji here, wicking off the 236 and moving on up again. So it's fair to say this is a clear area. Now, did I know that this would be the case before I drew it in? No, I didn't. But is it so often the way that these things work? Yes, it is. So it's not much of a surprise. So when I saw it happen like that, it was easy enough to talk about it. But the significance of that really, I think, more or less speaks for itself. We got hidden bullish divergence in here on this time, on whatever. We got hidden bullish divergence in here as we didn't actually manage to break this previous low over here. If we do it, then things get pretty ugly pretty quickly. And when you go up towards the 24-hour time frame, to remind folk again that really when you're looking down at these wicks, that there isn't very much there. And just from a structural point of view, you're obviously going to be looking down towards 730, and then you'd obviously be looking down towards 555. And if I were to draw them back on a Fibonacci again, and lo and behold, it would be the Fibonacci of the entire upward trend from the 12th of March until the upper highs. That would line up with the 50% Fibonacci retracement point and the 618 at those two zones, and that's what you'd be looking for. So then what about if we're wanting to go on beyond things, and how could we say that potentially we haven't actually really turned things around yet? Well, there's a number of ways of looking at that, if you like, and one of them could be, the Bollinger Bands. This here 24-hour time frame came down, tested the median line of the Bollinger Band. Overall, this is like within the realm of reason. It's just that we're looking at such big moves because this is a linear chart. Let me just put it onto logarithmic chart so these moves are less shocking in terms of the percentage differences, and we can see that it's not too distinct from what happened over here on the 24th of November, etc. all of a sudden, whereas on linear, this candle here looks like something that's come out of come from some is crazy, horrible. This has never happened before to us. This is completely new scenario. How could we possibly live through this, Rocky? Surely you're underestimating the power of that. No, logarithmic kind of makes that fairly obvious for you that while it is of course a bit bigger, it's nothing particularly shocking.
It's just that 21 or 20 SMA.
Yeah, it's the same. It's the same as the same as what we're talking about with regards to the Bitcoin charts earlier on. By the way, if you just tuned in there now, that was Tony talking, and he's just disappeared off my screen because I don't know why. Tony, you're not visible on the screen at the minute. By the way, it could be that I didn't click on the Discord window for long enough, and it chinned me out or something. I don't really know, but anyway, that's that. Right, anyway, cracking on. So that's the current situation. So what else could you look to in terms of this trend and the health of this trend that we've been in for the last 10 months at this stage? And what you would say is, well, you could put on the moving averages. You could put on some moving averages, for instance, these ones, which is the 818, going from yellow, green, blue, purple. What you're looking at here is the 8, 18, 36 and 54 exponential period moving averages, and we're above, you know, all of them, and we're above the 20 period, of course, simple moving average here, and we would be above the 21 exponential moving average as well, but we are below the 8. And looking back the way when we've been below the 8 before, you know, we did tend to go down and test the median line and the Bollinger Bands with body closures, and we've not done that yet, but we've done it with a wick. So could we see some of this happen and us then, you know, have a bit of a depressing wee while here looking at these things? It could happen, you know, and then maybe we just move on up anyway. I'd recommend caution until you see things actually break the levels that we spoke about already anyway. So these things are giving us a bit of an indication about the trend, but obviously it's not, you know, massively different. And in terms of the sort of simple moving averages and the, you know, golden crosses and death cross situations currently, if we're just looking at these two lines here, the red dotted line and the white dotted line, just to see what we're looking at across different time frames, has anything really happened here? So I'll jump down towards the 1 hour time frame to see, and we're coming in here and we're looking at how we could have a cross. Now I didn't know this was going to be coming up for a cross here. I just kind of by the distance that they're apart on the 24-hour time frame, combined with the big drop off that we've had here in the chart, it struck me as likely that in and around about the 1 hour we might be seeing the potential for a death cross, and we do see that. So in the next few hours, essentially, this could be lining up nicely, and then of course we could see follow through. Now where we are quite at in a minute is very close to these two moving averages, so it gives us an easy opportunity to test these before cracking on towards the downside. The last time they crossed, it was towards the top side. It was on the 27th of December, and of course we saw some nice upward action since then, as you all are very much aware. Before then, when they crossed, it was the 22nd of December. They crossed negatively. The prices then went down to 547, had previously been up as high as 650, so $100 off at that stage. In terms of profit, in terms of percentages, you're talking 13% down the way from the point at which they crossed, you know. So it could happen that you could get some follow through here for negative side of things, but none of it. But we're still waiting to see whether or not we break the structure here. If these two do cross, then we could see that, of course, getting retested as well. On the 4 hour time frame, you see that the moving averages, of course, are a million miles away from each other. It's only really when you go down to the 1 that you're going to see them coming in for a cross. The 30 minutes will obviously crossed already, and that happened over there, and we've had a retest of the 50, so we've done enough from a sort of from a moving average point of view on a really small term time frame, because the 30 minutes is very, very small, in order to say that we satisfied that. Of course, taking out the 200 will, of course, taking out the 200 here in the 30 minute would probably result in a prevention of the cross here on the 1 hour time frame, if you want to look at it like that. So that's enough. That's probably enough in terms of the overall TA for this one. I mean, yes, I could probably be more, I could probably slow down when I'm speaking at certain times when I'm talking about targets, so that you can like get your
frames. Different time frames are really important to go through before you make your trade, whether you're exiting it or entering it. You're always flicking through all of the different time frames. It's better just to take another 2 or 3 minutes before making and executing your trade, just to go through all of the different time periods, because it could be that you make a big mistake because you didn't look at the 4 hour or the 2 hour. So yeah, exactly. And that's flipping through.
Yes. So like in terms of like some of these things, like I mentioned some of them earlier on when we were talking about the time frames, like could something have happened on the 15 minute, etc., which maybe would see the prices pushing back up a wee bit, which isn't necessarily well, the 1 hour is a 24 hour time frame when it touches the simple thing. There's a, you know, we can see one right here as an example, but somewhere else where it isn't necessarily quite so clear, like over here in the 12-hour time frame where we had this wick down the way that then came straight back up, was there anything that could have given you any sort of indication on different time frames on this one where you might have been in a position where you might have been looking at that as being a possibility? And we can see we extended outside of it here, pushed up a little bit, didn't take out the structures, out a bit here, pushed up but didn't take out the structure, went out here, pushed up, and when we were asking questions of it, put in a higher low, moved up the way. I mean, I don't know what the particular thing was at that moment, but there's and I hope to see a really obvious example. Maybe the 30 minutes one, for it. Yeah, the 1 hour here's got is probably is. I mean, it may well be in this area here where we saw it zoom right outside the Bollinger Bands, quite likely that we'd come back up and test it. So we went all the way from, no, that wasn't the low, that was, we only went down to 1,015, and then the next hour went up to 1,138. But you're looking at a 10% rise in the price just off the back of this one candle. And if you're looking at on a bigger time frame, you're thinking here, oh look, we're going to trace down the way, and I don't know. I'm trying to build up a narrative here live, but again, I think the point kind of demonstrates itself more powerfully than I could with a sort of additional narrative on top. I could just, don't need to. Essentially, in terms of the parabolic SAR, no, not the TD sequential, get off my screen, 20 Vs. The parabolic SAR, this is currently saying that we're in a short mode from the, and things don't turn around until you're above 1200 again. On the 4 hour, the 24 hour is going to actually take us up towards our all-time highs. So essentially, in terms of this, well, like this is great to know. This is the same sort of chat as what we had before as well. Like you wouldn't get out of this until you currently you're if you were shorting it right now off the back of this, you would, on the 24 hour time frame, you're not really worried until it's gone up above 1,355. Now tomorrow that will change, but if you were over the period of the next day, you're not, there's nothing to be excited about. When do we see it getting positive again? It's not until you go right down the way. Is it just the 1 hour? And it's it's just on the 1 hour and the 2 hour that you're seeing it actually have positive, telling you should be long in this right now, and that's fair enough. But where do you stop out at on this one? Well, it's coming in there at 935, so you can see that there's a decent chunk in terms of percentages, in terms of what risk you're taking on with any given trade at any given time, thereby enhancing the need to find areas like this one right here whenever there is actually a point where you could say to yourself, look, I will risk and reward it in around about these zones, and and etc., going for whatever you might be going for at the time, whatever happens to be, you choose. I've laid out the clear areas, I've laid out the theory, well, not the theory, the actual the practicalities of what's brought us to where we are right now, including Fibonacci's between these two areas, showing us our high at the 1618, and linking up the 236 off the back of this one with where we find the 236 of the bigger all-time high, previous low at March the 12th up to the most recent highs. So you've got all your theory there, managed to risk in around those zones. That's cool. I'm going to just kind of skip onto the link at this stage, unless Tony's got anything in particular.
SAR, then it's stop and reversal. So when the trend stops and then reverses, that's what the SAR is.
That's it.
In case anybody...
Yeah, thanks. Sorry I didn't explain that one. Yeah, you're probably wondering. That's what SAR is. It's parabolic SAR. It's again, SAR, stop and reversal. Another one of these things from the textbook, the dictionary of trading, where you're going to find multiple different people saying, using a stop and reversal and defining it in various different ways. Again, it's just like every other phrase. It's got 3 or 4 people who've decided that it was them that defined it correctly the first time when somebody else did some other time, etc., etc. Anyway, in this particular instance, when I'm talking about SAR and the parabolic SAR, it's the J. Wells Wilder Jr. Technique of managing trades. It's not an indicator, by the way. You couldn't call this an indicator. This is a methodology for how you would approach your trades. So I didn't bring this on to say the prices are going here. I says that if you were J. Wells Wilder Jr. trading this on this particular time frame, that you wouldn't stop feeling like your short was correct until such times as it went up as high as 1,207, meaning that you'd taken a short.
Wells Jr. is your favorite. That's what I was saying.
Yeah, he is probably.
You quote him quite a lot. Yeah.
I don't know why, to be honest with you. It's not like I've not read other people. It's just that when you're looking at his stuff, he's super. He loves it, and its quality. Yeah. And then as well, I mean, the DMI and the RSI and stuff like that. I think that he has done it's done a good job, and other crap like that I've got on the minute, like the no sure thing indicator or whatever and stuff like that. I mean, they might whatever. The trading is as old as the hills, right? And nothing has really ever changed. You're okay using an indicator that was invented 50 years ago when you're looking at a chart that was invented by the Japanese 2,000 years ago to come up with how you're going to actually do your trades for this cryptocurrency, which wasn't invented until after the millennia. You're allowed to do that. You don't need the latest and greatest thing, and those are the ones that I prefer, and I think that they're pretty great. But there are other ones. I mean, there's plenty of other ones, like the MACD, by the way, just for people's interest, and that I tend not to use the MACD, the lines on it. Now, there's a lot of people out there who think it's great, and they're all totally welcome to. I just use the histogram for the divergences. I don't tend to use it for crosses.
Histogram of the lines, the red and the green lines that go up and down.
Yeah, and at the minute, it's negative, right? And we've come into this in terms of the lines. It's negative. We've not got a positive cross. You would have been trading it negatively and shorting it if you were looking at the back of just the crosses on this, up there at the high, up here anyway, shorting it down the way. Actually, the MACD looking beautiful in the 4 hours in terms of the two lines and the crosses and everything else, and you're not in a position to relinquish that trade yet. But could it actually turn around? Well, we're identifying the significance of this zone at 977 and saying this really could be a point where it turns around at. Failure to maintain this price is really not good. However, hanging on to a trade and only getting out of it at the point at which these two cross back over again isn't necessarily going to be your most successful route to, your greatest way to success, because like we're already, in terms of from those lows up to our high, we're already 20% up. So you can't feed your family off the back of trading off the MACD all the time for both your entries and your exits. Never. But as in terms of how good these two lines get, this is as good as an example as you're going to find. I mean, it did tell you to also go short over there on the 7th of January, and what happened? Well, you lost money on that trade. Okay, so they're not very good, and so overall I just tend to say fuck off to them, to be perfectly honest. But there you go. I mean, that's where we are. So anyway, there's plenty of different ways of looking at things. Yeah, but J. Wills Wilder Jr. would be probably my favorite of them. Let's jump on over towards Link USD and see how we are getting on. Let me just drag this into its correct position. This is obviously something that I drew on in the last couple of days or whatever, when that hadn't actually updated yet. By the way, you'll notice that I've got tons of charts on my favorite list. I tend to have multiples of them. Here's another one, blah blah blah. I've got tons of it, and I also have like my favorites list of I've got lists within my favorites on TradingView. You can do this as well yourself. You can just create a new list and you can add favorites to it so that you can go between them easier. And then again, it's like it's not always the same charts that I'm looking at all the time. And as well, you might want to color code your things as you look at them, just to group them up a bit. It's much easier to me to see that this is the link section and I know that I've got Ethereum above link, and I just have the colors draw my eye. But it depends on obviously how you're looking at things, or how your brain processes information. What have we got on the go with link? Is there anything that can speed up this technical analysis, I suppose, for this section, given the 4 or the 3 other coins we've already done? Looking down, when we've come in at the 618 of this Fibonacci retracement. Where's that drawn in from? It's not actually drawn in accurately, so that doesn't work. So I don't know what's going on there. I mean, that would be where I would have drawn it from, and I drew this, so I don't know why. Whatever. Anyway, we've come down towards the 618 here, and while we didn't make it into the actual golden pocket itself, who cares? We came in towards the 618 and found a turnaround. Now we found a turnaround at 1250. Looking at the left, just kind of hiding everything off here and seeing what is the significance of 1250, and was there any sort of reason for us to turn around here? Well, we can see that there's plenty of times when the prices have kind of reacted in around about those prices, so that's not a major surprise. But we've also drawn up the way here and got a body close in. And just like with the Ethereum and everything else stuff, we can see that this has got is closed above this area. Now we can actually make this a little bit easier to do the TA on if you cast your mind back as far as the XTZ USD parent, where we talked about this shape here and whether or not it was like an M. And over there on the Link USD chart, you'll get a sort of another sort of reminder of that concept, seeing that these two highs and how they line up, etc. And that while this is tempting you into thinking that it is one of them, it isn't. But nevertheless, you can absolutely and perhaps should look towards whether or not we move past this zone here. And in fact, this red serrated line here was drawn on by me before we did any of this dump. For whatever reason, it was drawn on there at the time. So I'm pretty confident in relying on my own because, like I say to all of you, by the way, your number one thing is going to be relying on yourself. So I can look at my chart and know that I drew that line on for me, and I rely on myself, and I can continue to rely on that line without really going back and auditing it necessarily. And I hope you just kind of accept that on the show for just now. But anyway, that's a key area. We came down, we hit it, perfectly, and then we moved up and we're past the 50% area. That's at 1360. We're actually right in here at the minute at 1439. So in terms of nice percentage moves and everything else, you got to look here at Link and say that this 20% rise up is of course reminiscent of what we've seen across the board really so far. Is that signaling a recovery to us? It could be, but we're not there yet. As you can see, we've not managed to take out the 382. However, the movement here between the 618 has gone past the 50 and up as high as the 382. And what do we talk about so often when we're looking at a Fibonacci retracement and it's gone past certain key areas along the way? Well, we talk about how if you were to come in and draw in the Fibonacci down the way from the top, to measure against this downward decline, that we're obviously above the 236 then at this point. And lo and behold, the 236 then is acted as support on this wick here. Once again confirming for us that there's a degree of sort of algorithmic trading going on here, whether that's by humans, or by robots designed by humans, or by robots designed by robots destined to take over us all, using cryptocurrency to buy. Yeah, they're gonna spend all the crypto that they earn in the markets on lasers and shit. Anyway, these robots, they brought us down towards. Look, I don't want to actually say, because like all of these techniques and everything that I'm talking about to come up with these numbers were invented before robots were invented, right? So that's not whether I want to pin it on the robots or not. I just want to say that this is lovely to see that 1390 was respected in terms of support, because where that 236 is, and that we are looking up the way with the potential to move past these areas. And what do we see? The 382 lines up with, and is it pixel perfect? Is it pixel perfect? It's not pixel perfect. I have to zoom it right the way out there to get this little bit, but you can see if you're on it in any sort of reasonable zoom level that they basically line up with each other exactly. So taking out that 382 towards the top side, very, very good. And it comes in, and your target would be the 618. And what do we see lining up with the 618? Well, it's the 236. So this is yet another one of these beautiful examples. Bearing in mind as well, when I opened up the link chart here, that the Fibonacci that was on here wasn't lined up properly, and I had to go and line it up from this low up towards this high, and then I've measured it against this movement down the way, and all these things lining up perfectly with the 236 at the 618 golden pocket. I hardly even need to spell out any further where your levels clearly are. 1629 is where that 236 618 golden pocket confluence is. The 382 comes in there at $14.80 ish, staying above for the importance of the importance of it at 1389, very important. Wicks down below that are comfortable enough, so long as we stay above 1329 in terms of all of the closures and everything else that we do, staying above this zone between 1389 and 1336 is going to be or 1329 is going to be important, unless we want to languish in the sub 13k $12 area again, which we ultimately could do, because when we look towards our last significant low, past the one that if we were to close any lower than where we did close, we would be taken out, we have to look down towards these other areas, and that comes in at around about $11 or so. So this is the importance of not taking out that area. On the 4-hour time frame, you see that it actually is there and visible and everything else. On the daily time frame, remembering on Ethereum and Bitcoin it wasn't so much, but here on the 24-hour time frame, we are blessed with being able to see a degree of support and resistance here in the recent past with this coin, because as you zoom out here, you can see that this is all potentially part of what could be an overall upward trend. And as you can see as well, I've mentioned numerous times in the past the need to discuss with yourself whether or not you really think that this is an actual proper significant low, or if it's just flux along the way towards a higher area. And in the past, or indeed as well, if you want to consider this to just be a short-term downward trend and everything else, this is what we saw happen. You could have said as well that this was a head and shoulders, and that we had a neckline here which we failed to break, etc, etc. There's a million different ways you could have looked at it. Anyway, we came in here, and it's curious to me, did we at this point of our low put in hidden bullish divergence compared to our previous lows on the RSI? That's as low as that. Well, yeah, I mean, compared to all of these. Yeah, so we had hidden bullish divergence at that point, came in, put in a higher high, lovely jubbly on the 24-hour time frame. The parabolic SAR coming in here again, it's going to be here until tomorrow, where it'll drop down to about that point there, about 1750. But if you're going to be negative about things, I suppose, which you could do at the minute on the 24-hour time frame, then you're looking to stop out, I suppose, at around about 1843. But that's just actually, let's be real, if we take out 1843, then we're going on and we're going to take out our higher highs. Most likely that's what we're looking to, our previous high, our previous all-time high, take out our all-time high for higher highs, yada yada, and that's bring us into the 20s, and the landscape could change quite dramatically at that point, having gone through all of this shit to get to that point. If I just want to flip reverse it, you can hit Alt I on your keyboards so that so that you can do this at home. Of course, never run with scissors and try to do.
Word shit is a negative term. It's bearish. It's a technical term. Shit.
Thanks for the clarity, Tony. Yeah, I did. I'd use it quite a lot. Anyway, if this was a chart that you were looking at, and I said to you, look, there's a chance the prices might break this $18 thing or whatever, you'd be like running for the hills. I would not want to long, oh my god, that's so crazy, etc. So the same thing applies, when you're looking up the way. Of course, maybe you might feel a little bit of the old for some people, they might think, they might salivate along at all-time highs and then convince themselves that they should trade against the trend at all-time lows, instead of it just carrying on and going further. That's quite often the case. Much rarer there is the person who would rather short a low and carry it down further than they would long a high. I mean, much rarer, right? We're talking 99 to 1 in terms of the ratio between the two. But just to put it in context, yes, if we take out this high here and that, we could be going on far enough. This is a logarithmic chart. Take it off logarithmic, you can see that it's like the cobra rising up, yada yada. So there's that meme for everybody. Taking that out, we could be going up, big time targets. What are those targets then? Because I don't want to bang on all night, but let's just draw in a couple of them real quick. Oh god, I've clearly done this in the past too many times, but the next target to look to would be $27. Well, there's three of them. 23, 25, 27 would be the easy ones to kind of pick out there in terms of what would be the next area to look to. Overall, we're doing okay. How have we done this recentness trend between these two highs? Have we got divergence on the go? Let me just bring up the RSI, and yeah, we do. Okay, we do. Let's face facts, let's face reality. This high came in slightly shy of that previous high over here, which so we've got that little touch of it. Now, is it game over for this? Let me put this into context and say you could only really say that this would be bearish divergence if we got a proper local low in on the way. Let's just kind of bear in mind that there's this discussion here at this point, does this count as one or not? And share it did during this little downward trend period. Does this one necessarily count as one? Well, who knows. See, it's like we're waiting to find out, and in the future we'll know. In terms of trading it for now, you're going to have to find an area where you're going to be able to manage your risk appropriately, and like that's really all it comes down to at any given time for any given trade. And overall, this looks pretty good, right? This looks pretty good. If it was on a negative chart, you'd be saying, oh my god, that's so scary. On a positive chart, it looks pretty good. We only have a little way to go towards those other higher highs. This is not great though in terms of the divergence, whatever. So long as we stay, it's what I said earlier on. Really, if we want to stay above these zones so that we don't go down to the 11s and languish in that area again, sub 12s, we don't want to. That's kind of where we are. The upside targets thereafter could be in a number of different places, but I already said 23, 25 if you go past the all-time highs. What about between these two areas? What we I can't be bothered. Well, let me just ditch everything off the chart. There we go. Just hit the delete button. Then where are we right now? Yeah, okay, so we got rejected from the 786 essentially. We don't have a lot to go to get towards the top. Well, that wasn't worth it. I mean, what should I talk about at this stage here? Kind of talked about everything that I like to talk about across the board. Everybody knows there's things that they could look at on their own from now and be able to make pretty good decisions. I'm pretty confident that people could do so. In terms of the DMI, for instance, then on the 24-hour time frame, have we really, have we broken this yet? Is it all screwed? It's not. We're still looking okay. Yes, between these two previous highs, there's a bit of the old divergence. Actually, no, only on the 24-hour time frame. Wait, what am I saying here as well? Was there divergence between that there and that was the 24-hour time frame I was looking at before, wasn't I? And yeah, there isn't the divergence on the DMI. Now, of course, the RSI is more important for divergence than the DMI, but it's not there. You don't have it across the board. So that's something to look out for. That's something I talk about as well quite often. Like, is it across the board? If I say that, what I mean is it's everywhere, that you're seeing divergence everywhere. I mean, it's just and when it's not, it's not. Okay, so it's just a warning sign. Okay, it's not not telling you what's definitely going to happen. It's a warning sign. So right now we're in the point where really it doesn't take much for us to go on and do all of that and turn this from being orange to blue on the ADX and reigniting that strength of trend. And we've not done anything like coming for a major high. This is 24-hour time frame. We've not done anything like we did over here on the 10th of July with our recent movements. Instead, we're just, we're fine. We've done really not very much. So could it go on? Yes, it could. And generally speaking, this has been an upward trend since the 22nd of September, really overall, and we've managed to maintain things towards the top side, clearer on the 3-day time frame or something. Low, high, higher low, higher high. So long as we really don't take out 11-12, then the trend is still in place. As long as we don't close lower than all these things, it's still in place. And that's the upside targets. What else is there that I could maybe mention at the minute? Just kind of see if there's anything really needing to be mentioned. I mean, maybe in the 1 hour time frame we can see the diminishing the story, which while in the 24-hour time frame we're trying to say this looks okay because it's not really kind of looking crap, right? Kind of what I was saying. It's not looking brilliant. It's not full on strength of trend, yada yada, but it's close to being there, and it hasn't started to look like it's really lost everything because it never really had it in the first place. Comparison to how, for instance, it looks over here on like the 2 hour or the 1 hour, especially, where we've come up past the 40 point, gone with bearish divergence on the DMI. The negative function of this, you'd have to look whatever, can't be able to explain that. It's got bullish divergence, on this function here, on this part here on the DMI, and the big turnaround in terms of the ADX, the massive downward slope, etc., showing you that it's kind of burnt off its negativity. So we're burning this off on the lower term time frames. On the broad time frame, we're not in a negative stance with the position to turn around fairly easily, so we can kind of monitor the situation along the lines here and see if it turns around. Right, so on the 12-hour time frame, we've got this situation. This is the most negative thing that you can see currently. We talked about this, Tony talked about this in detail actually earlier on with regards to the Bitcoin parent. It is only shown on the 12-hour at the minute in terms of, well, obviously they're radically different, all the different time frames, so it's not, anyway, this is where we are. This is a cross, and we've not got the follow through yet. As you can see just here, it's got this downward slope on the pink line, which is the negative, as the positive also slopes down the way, and this is currently sloping down the way. If this suddenly turns, if this turns around, then this would bleed onto the other time frames, and you'd see this as being negative, and it makes sense, as you see that we took out this low here, and we're asking if this wants to be, if this was a real, if this was a high and this was a higher low and this was a higher high, and we've now taken out that structure, etc., and that's real, then this is primed to go really negative, etc. But when we look towards the other time frames, we're not seeing that really the case. Not really here in the 24-hour time frame. Jump down a time frame below it and saying that, well, yes, we have taken that out on the 4-hour time frame, but the negativity is really starting to kind of, is close to almost as well turning around. And in terms of the 1-hour time frame, we're seeing this really has, kind of lost a lot of its steam. So this is sort of turning into pure DMI analysis. I didn't mean it to be, but this is what we're looking at. This can maybe be your sort of finger on the pulse if you want, from a broader term perspective, if like along the lines of when you wake up tomorrow you could check what this looks like and it would give you an immediate opinion on the market. Yeah, that's what you could do with the 12-hour time frame and the DMI, and then you could look at your price action and everything else and kind of get an idea about things. If we see this ADX moving stronger and up into the top side with the disparity, a divergence, if you like, or a moving apart between the positive and the negative on this one, on the the pink and the yellow lines, the pink going higher and the yellow going lower, then of course things are going to look really kind of negative across the board, and we'll probably have confirmed that this was important going below that. Right now this is flattering to deceive when the other things aren't looking so great, and we're maintaining particular structure above above the 1250 area, really, to be perfectly honest, and we've not taken out that zone just there. If we do take it out, then well, then you could consider, well, if we do, I'm going to just start repeating myself now. The thing is, it's like 20 past 1 in the morning here, and I've spoken quite a lot. In fact, Tony, you still there? You see, and I'm on my own as well now. I've lost Tony and everything. If you are there, Tony, and I just can't hear you, then figure that out in a minute. Let me check in with how you guys are getting on in the chat. What's up? I'm back, says 3000 Trin. Oh, you are here. That's cool. Tony.
I just can't see my ugly mug. You've got rid of me.
Yeah, sorry, I removed you off there because
I'm really upset about it, you know. I thought this was my hour of fame.
Wait, don't panic.
Oh, 21 now.
There you are, you're back. It's just because your screen went black for a minute or two, so I took you off, but you're back now, so it's all good. You're on the screen. Yeah, Tony. Give us a bit of your give us your impressions and what you're thinking about things as well. I kind of got a bit tired there, I think, towards the end of that.
I've had a few people direct message me saying thank you ever so much. You've shown me loads. I didn't realise any of those things. So I get and I'll send you some of the messages if everyone else is happy with that, just to show that the basics are really important for people to understand. One guy messaged me, said Rocky lost me quite a lot, but your bits were nice and easy to understand, but I am starting to pick up on what Rocky was saying, but he lost me halfway through. So that shows that he isn't at a standard yet where he can understand you. Whereas I can listen to you at 2 times speed and still understand you because I've listened to you so much, and obviously I get the lingo now. And
it's a really difficult balance. So, like you said.
Yeah, absolutely.
How do I do it? Because I want to give everybody everything. I realize some people can watch it too.
You spoke on the Discord perhaps of making like 2 different. Like an intermediate and a beginner, intermediate and advanced, or maybe intermediate and advanced class or channel, so that you're not losing some people and other people aren't bored because you're teaching them simple basic patterns and measured moves.
That was what I meant to say.
So for me, what I took from today is I just hope that there's some people, which I know there are, but I'm glad that there's some people that have got a benefit from the beginner side of things, which is the bits that I've put in. I've stopped you on some things that people wouldn't understand, like and other things that you might say, like POC, point of control. All these like acronyms and things need to be sort of spoken about to the beginners. But yeah, I think that it's really worth me, you, and maybe some of the other out competitions that we've all got respect from, and your brother as well, to come together and figure some way out of being able to cater for both fields.
Yeah, one way of doing it, and I'm not like determined to go down this route, but I have been thinking about it recently, is to have like an exclusive group of or whatever of like like a paid group, and it would be paid, but it wouldn't be paid. It would just be for people who are so comfortable with everything that they want to be a part of it, and they can pay the thing on Patreon or whatever, and then we'll make like a group for that. And it's not like, it wouldn't be like a signals group, it would just be like a place where I could spend more time talking to people who are specifically looking for that type of chat, or whatever, and we could talk to each other, and it'd be like really beneficial for everybody. Or something along those lines. I don't know, I'm not a massive fan, as you can tell from the last year, of putting out free content and all the rest of it, of like putting like paywalls between me and the people. So like, as you know,
yeah, I know you've said that. Just to interrupt you, I know I hate you don't like me interrupting your flow, but Michael has just said, Tony and Rocky, I would share the links with people, but I know that that are interested, but they're total beginners. So he wants to share it, but they're beginners and wouldn't understand a lot of what it is that we're saying. So there is definitely a demand. And yeah, I mean, what do you do? You turn around and say, give us £1,000 a year and we'll give you a load of content. Well, then you might as well just be like one of the others.
I know. I don't want to. I don't.
Absolutely, I agree with you. We don't want to be that. Well, I'm saying that's not where. But there has to be some kind of way of splitting it. But all this is work, and it's not you begging for money because you don't want to beg, and it's not about the money. But at the same time, you don't want to be.
It's not a charity either, you know.
Yeah,
it's like
I mean, people don't know your history.
Yeah,
where you've got all your knowledge from. I mean, that's for another day, but that has to account for a lot.
Yeah, so like there's that, and there's also my own, I think, perfectly fair aspiration to be able to derive. I mean, I think that it's fair if I am expert in something that I could use that in and of itself to give to earn money. Now I already do by trading, but does that exclude me from then being expert at trying to help people or whatever, or doing it, doing this thing right now? And is that fair or not? I mean, I don't know, and I want feedback on that. But the idea of me thinking to myself that I should be able to aspire for this YouTube channel to have as much sort of revenue generation as a guy that plays Fortnite on his PC. I think that's fair because because anybody can play Fortnite, right, or whatever, and chat. So like I don't know, and I want it, and then I don't know. There's so many different ways of looking at it. Did you know,
I've got
Tony?
A really great thing to say. I've got a really great easy thing to say is that that never ever once have you said to me, Tony, here's a trade. If I was you, I'd put it on because it's going to make a load of money. You've never once ever said that to me. But we were on a trade earlier on, and it was my trade. It was my trade setup. There was a couple of us watching it, and we were talking about it. And then the trade triggered, and I'm now making money off of that trade. And that's my own trade. But I wouldn't have made that trade. I wouldn't have been patient. I wouldn't have understood everything if it wasn't for the last year of listening to you and then finding out and asking and being humble. And for me, I think if the biggest bit of advice, I mean, I don't know if I'm going to come on this channel again, but the biggest bit of advice that I can give any of you guys, be humble and ask. If you don't understand a question or understand something, ask. Don't be embarrassed to ask. I was saying to Rocky about 30 years ago when I was at school, one of my friends at school turned around to me and said, Tony, I'm really, really embarrassed. What are graphics? When people talk about graphics, because we were talking on like master systems, and he wanted to know what the difference in a master system and a Mega Drive was, and all the kids were talking about the graphics, but they didn't understand because we were 9 years old or whatever, and he was too embarrassed to ask anybody, and he came to me because he's my best mate. What are graphics? I'm a bit embarrassed to ask. It was because of that humility that he did come to me and ask that he then went on to understand what graphics were and computers and all the rest of that stuff. And so that's the biggest thing that I can say to anybody is be humble. Don't be embarrassed. No one's going to laugh at you because you don't know what a VPVR is or what, a POC is, or any of these things. So ask.
Also, I've been in the same situation in many walks of life. I've been in the exact same situation lots of times where I've thought to myself, in many different ways. Like, for instance, I've been look, I speak Spanish, right? And I speak Spanish nearly fluent, well, good enough, right? I mean, when I was like 15 years ago, I'd have spoken it fluently, okay? And I it's been a while. Anyway, when it puts you in funny situations, because you'd be talking away to somebody, and you have to make a choice. Do you have the conversation you want to have? Or do you think, I can't say that because I don't know those words, I don't know what they are, and I'm going to embarrass myself. Here I am trying to chat up this bird, or here I am having a laugh. Do I stop and say, how do I say this properly, or do I just hide and be too ashamed? And then and I would struggle through with it and kind of swallow my pride or whatever, and realize that on the other end of it, there isn't any sort of shame, there isn't any pride to swallow, because my friends helping me learn Spanish, but Spanish friends weren't looking at me and saying this, there was no shame, there wasn't any, but I felt like there would have been before I asked. And then of course I ask and learn something, and it's the same thing in trading. Like, if anybody asks me a question, I never think to myself for a second like, oh, they should already know that or whatever, and that never occurs to me at all. Instead, I just kind of just don't think about it, because it's totally natural. But some people will be reserved and not want to ask a question or not understand. I've just lost Tony for a second, but he'll be back. He can still hear me probably anyway. Some people won't want to ask a question because they feel like they feel like it's going to cause some sort of sense of shame, but there isn't any. There just isn't any at all, and I never feel like that with anybody. And I know the exact situation, loads and loads and loads, or been in it enough times myself anyway to know. So that's that. During the first lockdown, TradeSpotting says here in the chat, all my neighbors came out to dance for 15 minutes together at 12 at midday and got to know each other. I told them what I did for a living and BTC when BTC was at 4K. There you go. There you go.
I'm on my phone now.
Well, it's good to have you back, Tony. I mean, I can hear your voice. If I can get your face up, then that'd be cool. We'll see if that kind of happens in a minute or two, when Discord does its wee load in squares thing and figures itself out. But yeah, you're so right in what you say about the benefit of just communicating about what you want to know, and there's no shame there, and that's what we do in the Discord. I've never had it so far, and I keep saying to people it's going to get to the point where I can't respond to personal messages and stuff like that because there's too many people and all the rest of it, but so far I've never turned anybody away that's asked me a personal question and all that, and I'm a member of the community as much as anybody else is. I want us to all figure it out together. When we're sat here talking about the money aspect of what it is to put on a show on YouTube, and that I've got no interest or any of that in like begging people for money. I mean, that just sounds really ridiculous, but I want to figure out from the point of view of what the community thinks is the way to do it, is a way of making it so that there's a nice money flow in the channel, and then to grow that money flow up enough so that it can do, I would like it, for instance, if I was able to say, what, Tony, you're such a great guy. You do this, you host this chat in the Discord every Monday. You've done it for free without asking a single person for a penny at all. Here's £100 a week for doing it. I'd love to do that, and so that you could buy your girlfriend and yourself a couple of bottles of wine and a takeaway and go out for a movie once a week as a reward for doing it. Nice. I would love to be able to do that. But I can't run this as any more of a charity than I already do. It's ridiculous. I can't actually do that. Yeah. So, but so within the community, and I would love to let that flow a bit more and everything else, and so we'll have to figure out a way to do that. We have to do. Rocky 3000 Trin says, when you grow your own business, the price return does not always equal the effort in the beginning. You're not negotiating a wage as if for a job, you're building a whole experience. Well, that's it, and I've been doing this for a year now. I've been doing this for over a year. So wait, I missed something else that you said earlier on, by the way, 3000 Trin. I hope that I haven't missed a part of a conversation. I maybe should have read that at the time. But I've been doing this for a year, and I want to know how to grow it in a way that really honors the community properly, and all that, instead of I don't want to. I don't know. Anyway, we'll all figure it out. We'll all figure it out together. Hopefully, right? And then that would be great. I don't know. Anyway, Michael John Scott said, it's strange, my mum's a very good artist and art teacher. She didn't charge much for her artwork, but because of that, people wouldn't want it on their walls because she was cheap. And that's it, man. I mean, That's it. Small businesses should always plan for 2 years of no profit. Yeah, totally, absolutely agree. I mean, I'm not in this. I'm not. I want to know what the path for the future would be, which is why I'm talking about it.
It's those little £5. That little.
Well,
£5
yeah,
I'm saying little. What
no, it's loads. It's loads. It's loads. Yeah, it's loads.
Do you know what I mean? You got 2,000 watchers, and if each one of them gave you that, then you that's it. You've got yourself a wage there that you can then give me.
Well, that's it. And I'm not asking, and I'm categorically not asking for money. You know, I'm asking for what people think would be the best way to do it, because it's like Michael John Scott's mums with the painting. I don't want people to think that my paintings are not worth anything because I'm not charging Christie's prices for them. But at the same time, I'm not wanting to charge people and exclude anybody. I've never turned away anybody that's come to me with a private message or anything like that. And you know, and I am so I want to know how it's going to go in the future, you know, and what I should plan for, because knowing it now in a group when there's just 20 people viewing it means that I don't need to sit here with 500 viewers having a discussion. Then that's just going to be embarrassing, right? So I can talk about it with us all together in this small group now and that. But yeah, that's cool. Dude, you have a semi-trading show community update room. Yeah. Okay, so there's like ideas. It's just semi-trading show community update room. Yeah, maybe I need to think about these sorts. Anyway, yeah, Patreon members only. So yeah, those are the sorts of things that I need to do, perhaps, to make it for every, to make it so that there's different points in there. I feel
where you want to be. So listen, giving out pay signals, buy signals, and things like that. That isn't your goal.
Well, my goal is to make everybody. Like you've demonstrated today that, and I don't take credit. And that's the other thing as well, is I don't really take credit. What I want at the end of the day is for people to be able to give themselves the credit for what they've done. Which makes it even harder to ask to say that people should pay anybody. So like, yeah.
Contradicting terms there.
Yeah, I know, exactly. The whole thing with having like a premium group was along the lines of it'd only be for people who were who felt like it was a tip anyway. That for somebody who's a new trader would be looking at it and saying, I don't want to pay that. But for somebody who's been trading for a while and feels there's good value and everything else in what we're doing, it's really just sending me a tip, And I get that there's a big difference between those two, there's no sort of, I don't really make any assessment about it at all, So I don't have an opinion on that really. Just I recognize that there is a difference, and that the sort of thing that like making a group so it's like I really don't know. I really don't know, and I'm not even the only reason I'm discussing it is because I thought about how am I going to be able to grow the community to 100,000 members. I mean, if I log on to one of the other big YouTubers Discord group or whatever, it's just constant comments, constant, and there's no way for anybody to get it's not like that in our one at the minute. And here we are telling people join it because it's great, but that's not sustainable. And if you open up a new room and and everybody has access to it, then it just becomes the same again, not sustainable. So I don't know how to run it in a way that's sustainable, and I'd rather decide that what's sustainable now at the start. And like,
I guess that's why it's for it. I hate to bring money back into it again because I hate to bring money back into it again. But if people are paying to be in a separate room, then you kind of expect that if people are paying, they can see the value of what it is that they're in, and therefore because they see the value, because they paid for it, then hopefully we'll have a room full of mature men and women that of an educational standard that they can bring stuff to the table for us all to consider before we decide for ourselves whether we're going to make any trade or not. Well, we'll have already reached that standard.
That was the idea, it's like how gentlemen's clubs work, right? Where you've got where it costs you money to be a member of some gentleman club, and what do you get in there? Well, you're meeting people that you could have met. You know, you could arrange with all your friends from the gentleman's club to meet at the cafe and not pay. You know, right? Okay, you could do that if you wanted to, and you don't turn up at the gentleman's club and really get anything particularly from the gentleman's club itself necessarily either. But the fact that there's a price tag on it means that that there's a certain sort of seriousness about whether or not you actually want to be there. And when you want to be there, then you're providing that value, and it's in and of itself. It's kind of just in and of itself. Not that because I wouldn't want to do signals. So I don't know. I mean, the idea would be that you would have a group of trusted people who would essentially be giving each other signals, you know, but they wouldn't be giving signals. They'd just be talking about what they're doing to trade. And there's no arena that I would do that in at all currently. Because it hamstrings people who are new traders, because I massively believe in the importance of becoming self-reliant. So that's why I want to do all of this and keep telling people you need to rely on yourself. You need to rely on yourself, you know? And that, so I keep saying that to people, and then that's why I would never run a signals group. But I would run a group which has a sort of cost entry fee of people who do rely on themselves, so that they can discuss things in a sort of, you know, in that members club format. I don't really know how to think about it at all, really, to be perfectly honest with you.
We've been thinking about it for a while, haven't we? All you know, a few of us. I know Jamie's got some ideas. Something will come up. But anybody who's listening, feel free to keep. But we need to join the Discord. So anybody who's not part of it, it's really simple. You get on your app on your iOS or on your Android and download it, and follow the link on the in the description here. Or you can even get Discord on your computer as a program, or you can go online and just go through it online. But join up that way, and then you know, leave your comments. Because the more people that give their ideas, the more ideas that we get that we can discuss, and then Rocky can decide, you know, you might have some eureka moment from a comment that you've put down or something.
Yeah, and also when it does, and also I am genuine when I say that I want to be able to create opportunities for other people within the community too. You know, like for the likes of yourself, and for the likes of you know, TradeSpot and Jamie and all the rest of it, so that you know, it's not purely out of the goodness of your heart. I mean, we're not making a religion here where everybody just like does stuff because they, you know, they feel like it's morally an imperative for them, and that they're just good people. Like, you know, that's great and everything, but I would like to be able to say, you know, there's £100 for that stream, and it's great because it doesn't cost me much. It's only a fraction of what comes in for the channel, and blah blah blah, and then you can then say, well, that's cool, because then I'll buy a new microphone and a faster internet connection dedicated to it, so I never have any problems, and you know that it's not costing you anything, and that sort of thing. I mean, like, and just in terms of the market and whatever, I think it's fair to aspire to kind of think like, you know, Mitch Ray gets $68,000 a month from his Patreons. You know, that's what he gets per month from Patreon membership. And I don't know, and he has employees and everything else, you know, and I'd like to be able to create opportunities for people based on value and community, and in no way based on begging for money, because and just to want to be very, very clear, that's not what this is. What this is me having an open, transparent discussion with people now, you know, like, so that everybody can see the open, transparent discussion, you know, whatever. Anyway, I saw somebody else ask me earlier on to take a look at VeChain, and I thought that I would. You know, there's a couple of little slight differences in terms of some of the things that we've talked about here. This 12-hour time frame, is it the same on the 4-hour and everything? I mean, it is. On the 12-hour time frame, we see that this high is higher than the subsequent high. So in terms of like, is this kind of W or ME or whatever, then, you know, we've got that facet. But this in between point doesn't really, you know, it doesn't necessarily I mean, it's quite shallow. It's not really fully there, but it's maybe something to consider. But overall, the price, the technical analysis for this, because like I said at the start of the show, whenever the Bitcoin got up and said, I'm not going to do what everybody thinks I'm going to do, and freak out, and then only the secretary came with them, actually the entire market moved at once there, including other stuff like gold and all sorts of things. So what we've seen here is there's been a big drop down, and it's more or less the same, and we're finding ourselves coming in at key areas, and it really is kind of laid out already for us in terms of the chart. If we take out this area here at 26, it's good, very good, because it undoes from a smaller term time frame like the 4 hour. You know, we need to take it out and move up beyond, you know, the 28 area to prevent this from being really, you know, a bigger head and shoulders than it already could have been, you know, than it already sort of potentially, you know, could have been in terms of breaking down past that zone and where we've gone down. That's not done the full measured move or anything. I don't know, whatever, that type of idea. So we need to do that to prevent it from being a problem. That blue line there is coincidental, but whatever. We're currently below the 236 on this one. Not great. You know, while with everything did the same thing, this is looking more or less like it, but not quite as good. So the shoulders and the high, you know, the high followed by the lower high, and then the movement down, that's not great, you know. And we've taken out this low over here, and we've not recovered it yet. Instead of like wicking back up above it and then closing above it and closing above the 236, that's not great. So it's lagging. So in one way, either it's moving ahead of the market and the rest of the market is going to follow down with it, or it's lagging behind the market and it's yet to catch up with what the other ones have done, or it's kind of doing its own thing at the minute, having suffered a hammer blow from the overall industry. And this one is moving, you know, in a little bit more negatively. In a way, I hope it's not foretelling for the rest of the prices, but you know, starting off and taking out taking out our previous low, moving towards the top side, very good, but not a done deal. Certainly not, you know, rescued anything. Taking out the 26 area, very good, but you know, all it really does is leave it so that we're still in the realms of possibility for head and shoulders or whatever in different time frames where, you know, it's not visible on this, but whatever. Taking out 28, good, because it kind of undoes the head and shoulders type idea, but we've still not broken we've still not gone up for higher highs. And then taking out 31, 91, very, very good, because the trend's continuing on the way. But by that stage, of course, you're massively in profit, having gone up by nearly 50% in terms of price. So there's plenty trading to be done there. What we can say is that if I just kind of move this down out the way again, what we can say is that we have an overall upward trend here, and that we've not taken out, you know, that to call this area just here the previous low is a little bit much in a way, because really what this looks like is this so far, and that we have this low, that, you know, the starting point, this one, and then what we're doing just now overall, and that this wasn't really a high, but this was the high at the top of it. So we've got this movement towards the top side. That's very good. We have the same idea here in the 24-hour time frame of these kissing the DMI, and as we see on Bitcoin, and we're yet to see how that really pans out. It's not crossed like it had on the 12-hour on Chainlink. It has crossed actually like it had on the 12-hour on Chainlink, whereas on the 24-hour, like we saw on Chainlink, it hadn't kind of gone to the point where it was looking crap yet, where it has here, like it's copied Bitcoin on that front, you know. And then in lower ones, we're seeing that there's this burning off of the negative trend like we saw elsewhere. We're also seeing that there was a bit of bullish divergence on these lows and movement up the way. We've not taken out the structure though, like we have on some other charts. That of course starts at you know, these prices we've already spoken about so far, you know, taking out those levels that we've already spoken about. But the reasoning behind that idea is that we'd be taking out these highs. So that's all. That's what we need to see starting to happen. Otherwise, things don't look super fantastic. And I don't want the parabolic SAR on there. Instead, I'm just going to kind of look at the VPVR is going to be a waste of time right now. Maybe not, sorry. Just as we look here and see, yeah, look, that's kind of interesting in a way. We came down towards this node, back up again, that's good. big drop off here. You know, a lot of people would have said, well, if we go as far as this, then we're going to go the full way. Presumably before we came down here, this wasn't quite as big as it is now, but you know, we didn't. So always look out for this little facet inside the VPVR if you're using this, that gap in it doesn't mean that you're necessarily going to fill it. It's once you've gone into the gap, you know, once you've gone into it, then you can continue the rest of the way. But if you don't get in there in the first place, well, then you're just looking at through a glass window at what could have been. If we do go down the way, then 17 is the next level towards the downside. Moving towards the top side, get it to 25. You know, where we've managed to get to so far is pretty good, but 25 is really it. And we've already covered all the targets. In fact, I'm not going to change my mind on the targets. That's really more or less going to do. In terms of the TA on this one and the general shape of things, if you want to say that this is just continuing on what it is, and this is all great and normal, despite the fact that we've gone lower than that previous low, you're going to look towards the hidden bullish divergence. Yeah. Between, no, there isn't. That's not correct. You're not gonna. That's not what you're gonna necessarily say, is it? No, it is. Yeah, you're gonna look between the hidden bullish divergence of the actual low that we've not quite taken out yet and where we've come, and saying that this was perhaps just, you know, not really the low to look to, and you're going to look at the overall shape of this thing and say that if I could be bothered, I could probably fit this into a pretty good looking pitchfork where we'd have come really low on it as well. But you just like generally speaking, that yeah, no, we've moved outside of that zone. That's probably a bad idea. Take it off logarithmic as well, so we can see the real thrust of this thing. Yeah, you know, this is the danger zone, and as you can see, that VPVR says an awful lot about what we haven't actually done, and therefore that's the most bullish aspect of what we're looking at really at the minute. And then there's the 236 comes in at 27. Let's invalidate this Fibonacci. We came down, we hit the 618, we did that. That's perfect, as that arrow shows where that lines up with. And we've taken out the 236 in terms of this movement towards the downside, so that's good. We haven't taken out 382, moving away from there at the minute. Yeah, cool. It doesn't look too bad. I want to stick on some moving averages though, so we can get some more context on this here. For instance, the 1 hour that's had that death cross we spoke about on other charts, but over the 24-hour time frame, actually, you know, in the 24-hour time frame, what we can see is we had a golden cross over here. This is distinct in a way actually, because of all the distinction that the things I've pointed out so far, which are like bearishly distinct from the other charts just ever so slightly. On the 24-hour time frame, it's maybe worth pointing out that we just got a golden cross in there at the end of December. The Christmas time, we saw a golden cross, and then we've come back down and subsequently retested the 50 moving average. And if we do manage to, you know, stay above the 50 moving average, whatever, stay above 20s, all that sort of stuff, but moving up the way here and looking back the way at this afterwards, this would look very, very positive as a confirmation of the golden cross, you know, on the 24-hour time frame. So that's, you know, something really relatively recent.
I think you could do a whole episode of moving averages.
Yeah, you could. Yeah, I probably should. You know, I've done them in the past in terms of just like, I'm only going to use moving averages today, but we could do a whole episode of moving averages just talking about them.
Crosses,
yeah, slopes and everything else. We can see in terms of like the small, these exponential moving averages that I've got, that the big ones like the 50s is 36. Well, they're not even big, they're still really small overall, but they're larger than 21, so I'm calling them big, and they're still sloping towards the top side, and we came in with a retest of that atomic number down there. But the low one's big, like, you know, pushing down the way, giving you that feeling in terms of the short-term view, like, oh, this is negative, but we remain in a really positive stance overall with regards to the upper move, and the overall trend is still in place.
The 9 on trading view, the 9 moving average. I've never understood why that's the default setting.
Yeah, I know. Yeah, it's popular, I guess, is like one reason. I mean, I can't tell you off the top of my head, because I've never really read anything specific about it as being, you know, why it is there. I don't know.
Random default.
Yeah.
Where's my Facebook?
Oh yeah. It's gone black. Let me just see. Are you back? You are back. That's good. Right. Sorry. Oh no. It does this. It's doing that square thing on your face. Let me just see. At least it's streaming the square thing so that people can see.
There should be somebody there.
Yeah, there should be somebody there. Obviously, this sort of hiccup is we're going to put that down to sort of teething issues, right? I mean, we'll call it like this is something that I've only done once before. That was with TradeSpawn. It was a fantastic guest on the show. But yeah, you know, this is only the second time I've ever done this. I'm seeing that Jern Nadal came along earlier on and said Bitcoin question mark Bitcoin, no exclamation mark, yeah, just Bitcoin question mark question mark question mark question mark dropped to 33,900. Well, it did, and that's cool, because what we were talking about before is that I want to see it staying above all the threes, essentially. I mean, you could narrow it down to 33,000, but what I'm wanting to see is it stay above all the threes, as in terms of our body closures or whatever. We've broken that towards the top side. That's good so far. We've got the moving averages here. This is the 1 hour time frame just, and we've come back down and touched this 8 period moving average, and we're right here between the 8 and the 18. This is preventing currently from giving us a positive cross in the 1 hour. Scrolling back up the way, you know, we were all positively crossed the entire time, really, mostly, until we really dumped down in prices from the 40,000s down to the 30,000s. So this would be a nice, you know, initial, very early, you know, very early low, as a small time frame chart, etc. And this is a small moving average versus another relatively small one, etc., etc., etc. But this little cross here could be your first sign of success, and that's totally achievable, and we're back up above 34,200 at the time of recording. So, you know, don't panic too much in about certain sections of things. The fact that we didn't take out our previous high overall is not great. It does set us up for this conversation we've had about you know, the way that these things can form up. Obviously we have a prior downward trend which has come up and down again, so it's not like your classic upward trend followed by an M or whatever, but we're seeing this be currently operate as a lower high. That's fine when you bring up the oscillators down below and see that, for instance, on the RSI we got rejected from the neutral line on our first pass. Well, it was our first pass. You almost always do on your first pass. For instance, you see the downward slope here on the ADX of the DMI. You see the stochastics coming up here towards its overbought zone. Sure, we want this to stay above neutral in general. I'm not actually massively fan. Like, I don't like how that's too high. That's so high at this stage so early on, but there it is. Probably, you know, it'll look massively different on a different time frame. I mean, we've only just turned it around on the 4 hour, for instance, and even at this stage we've not got a positive cross or anything on the 12 hour time frame. So we're miles away from really having done anything. So haven't seen this up so high on the 1 hour is like of really no consequence, but we're at a mode where we could, you know, move towards the top side, and that's gonna, that, you know, that's cool. I mean, that's cool. Don't panic, buddy. At that is not, this isn't much of a drop. That isn't much of a drop. I see, by the way, that you've disappeared again. I wonder if you're still, in terms of if you're still here for speaking, Tony.
Yeah, absolutely.
Right, cool. Well, that's great then. So yeah, well, let's check in with the chat together. Have you got the chat up on screen as well yourself?
I have.
Well, cool. We can see what people have been saying. People can say good stuff. I've seen lots of nice things in there. I saw like heart face Tony and stuff like that during the stream. So you're getting a bit of love in there. That's nice to see, and it's nice to give shout outs to all these people. And just because I can see Lewis is away off to bed, for instance, you know, good night, mate. John's away off to bed, good night. We've got a lot of people away off to bed, I guess, that are from the, you know, from the Europe area.
So late, were we?
Yeah, we didn't expect to be. It's now 2 o'clock in the morning, but it's been nice. I mean, it's been great having you here, and it's been worth it to kind of go on a little bit longer than normal. But this is now become. This is a 3.5 hour stream. You know, these are monster streams.
Yeah, we've kept attention. We've still got 21 watchers, so we've kept attention.
Well, that's pretty cool. That's great. You can see how it. You know, it's a lot of talking. I've got this water beside me, and occasionally I take drinks of it because it's a lot of talking. You know,
I think we've said pretty much everything we can say. Yeah, it's just it's good that there's so much more that we can go into and delve into, but like topics at a different time. I suppose as a synopsis, anybody that is listening now, me and Rocky had no idea what we were going to talk about. Like right to like literally about 4 minutes before it started, he said, "I'm just going to go and just go to toilet and do whatever it is that I need to do before I start the show." And he says, "Is there anything in particular that you want to talk about?" And I went, just wing it. We'll be fine. We'll just just be ourselves and see what happens. I'll keep stopping you every time that there's something that I think that the beginners might want to learn or know, and maybe we can just go from there and see what happens. And that's what we've done. We've completely winged it. So what you've had today is Rocky being Rocky, me being me, and hopefully the beginners have learned something. More advanced people have thought, yeah, okay, I've listened to Rocky. That's his opinion on what's going to happen with the markets. And you've all got. I think everybody has got something out of today's show, regardless of their status. Apart from Jamie, of course, because he's all knowing.
I see in the chat there that 3000 Trin says my homework for tonight is to watch Field of Dreams. Let me just. I'm trying to figure out if I've seen this one. It's Field of Dreams 1989, so I might not have. I don't want to look up. I'm not cheating here. I'm not looking what it up. I just want to see if I've seen this or not before. I don't know if that is the movie you're talking about or whatever. It's 2 a.m. here. I don't think it's fair to say that's homework for tonight. How about that's homework for tomorrow night, maybe? And I'll just press play on it and enjoy it. So thanks very much for 3000 Trin for the suggestion. It's cool that I'm probably guessing that there's some sort of connection to something that we've been talking about here this evening as well. So that's cool that's a thing. And I'll check that out at some point. So that's cool. Thanks very much for that. I can see as well there's some other people here who maybe should get a shout out from me that I've not necessarily seen before. Collecting History, for instance. Do you think we will see a V-shaped recovery on the 24-hour chart? He's asking, and that's a good question. And by the way, Collecting History, it's good to have you here. If you're already, if we've communicated before directly, then great. And I apologize for not being able to recollect it right now. If not, then that's cool. Are you a subscriber here? And Collecting History, when you see names like that, you've got to assume that they have a YouTube channel. So I'm if you want me to go check out your YouTube channel and give you a shout out on here so that we can share the love, then I'll absolutely do that just now. So I wonder if you do have one. It's Collecting History. Let's see if you're there. There's Collecting History. Look at this coin collecting stuff. Super interesting. I've seen people do coin hunts and stuff like that. I'm just letting this play for a second. I've seen people do coin hunts and stuff like that where they kind of buy a big bag of, or they convert $100 to cents or whatever, and they go through them and find the special ones using this sort of technique here that I'm seeing in this video. So that's quality to see that. I wonder, it could even be that I've learned about this from like watching your videos, but I don't know. It doesn't seem likely. Give you a thumbs up there and leave a comment on to say thanks for all the info on your stream, buddy. So there you go, and I'll check out this. And I always do this, by the way. I always check out when I see people have got their own YouTube channels. I always check them out. I like to give people a shout out because I know a lot about. I've got a vague idea about the I love it. I got a vague idea about the effort that goes into doing this sort of thing, so I massively appreciate and all that sort of stuff. Creole, nice to see you here again, my friend, dropping that fire emoji as you so often do. It's so good to have you here, and all of that. Yeah, so what did he say though? Do you think we will see a V-shaped recovery on the 24-hour? And here's the here's the 4-hour, and this little bit here. Pardon?
I was going to say it's kind of started. Whether it will go down more very shortly, but the V has started. I think you were about to do it, weren't you?
Yeah, that was
frame to like 4 hours.
Yeah, that's exactly. It's like so you're asking, are we going to see one on the 24-hour? And it's just red. It's just 5 red candles. What, 1, 2, 3, 4? It's just 4 red candles on the 24-hour, and I couldn't like legitimately say yes based on the 24-hour chart. Okay, I mean the 24-hour chart doesn't say, oh, that looks like it's going to be a V-shaped recovery, because it's just there isn't one there. But if you drop down the way and you start to look, I mean that's not ideal. Okay, the 12-hour doesn't give you that right there, and the 4 hours starting to have the possibility, not massive fan of that. What's a good example? Like there's some examples that no matter that if you know about trading and whatnot, there's some good examples from the recent past from other charts to do with 24 hour V-shaped recovery type things, and maybe I should go try and find one of them and look at what that looks like. I'm looking at the wrong chart here. I wanted to look at the S&P 500. Sorry. Examples of that sort of a thing. This is a V-shaped recovery, for example, or here. This is like, I mean, this is textbook over here, right? What we need to see happen is a few things about it. This just happens to be this candle, then this candle. We did and a wick going up the way. We didn't really get like an engulfing candle in this one day of the previous 2 days, but on the 2-day time frame, if it just kind of hopefully you can see then you've got this engulfing of the previous, and in a sense you could also make a comparison between V-shaped bottoms, V-shaped bottoms as tweezer bottoms are kind of similar. It's a similar idea, because this is like a tweezer bottom here. So when on this chart would it have been fair to have had an analyst say, I think we'll get a V-shaped bottom, other than just purely not based on what they're seeing, but based on for it to not be based purely on speculation, on their gut feeling, is what I'm trying to say. Essentially, like, oh, I think we'll get a V-shaped recovery. I mean, when this was happening in the US markets back there on the 20 and in December 2018, I don't think people really anticipated in general a V-shaped recovery necessarily. They got really quite nervous in at this zone, and then it recovered. But I mean, if you're a fan of, for instance, Carl the Moon, it was in at this time here. I'm pretty sure that he was very adamant that we were completely and absolutely fucked. And then it went up the way. I'm not too sure. Maybe it wasn't. Maybe he didn't talk about traditional stocks then. But I mean, a lot of people were very, very negative here, as you would expect, having seen what we've seen on the way down there. Now, was that necessarily fair? Well, in terms of like at this point here, there was a big recovery in terms of the DMI. It took a while, and then ultimately, we only really came in for a choppy changeover and whatever else. We kind of continued up the way without the strength of trend really being in place. In terms of this low, when it came in as well, it was bullishly divergent on the RSI. So that was bullishly divergent there. But what other features do we see? Well, this was a really significant low with a really sharp rundown into it, and then a recovery afterwards, which was like when you jump into the hot bath and then you jump straight back out again. You really went for it though. And when you make the comparison between that and the Bitcoin prices that you're seeing on the daily time frame, just to make a comparison, in terms of what is a typical, when people talk about a V-shaped recovery or whatever, we're not there yet. What we're actually at in the minute is, if I'm perfectly honest with you, if you want to be perfectly honest about things, is that now that I've put this on the inverted chart, it looks a hell of a lot more like what we were just discussing on the S&P 500, the SPY, this looks a lot like that, doesn't it? Let's be honest, it looks like that right now. So I mean, I don't want to end the day on the most bearish sentiment, but I mean, you asked the question, right? And that looks like a V-shaped recovery in process. So that's what that looks like. For me to say that this going up would look like a V-shape, it wouldn't really push those particular buttons, So, right. I hope that was helpful and that I didn't make you go get the gun out the closet or whatever, right? But so just be like, we don't need to worry quite yet. We don't need. Let me be clear. We don't need a V-shaped recovery. Let's just bear in mind what a V-shaped recovery is. It's a phrase that's bandied around too readily by people. If you're talking about seeing a V-shaped recovery on the 24-hour time frame, did you say 24? Because I don't want to be wrong with this. Yeah, if you're talking about a V-shaped recovery on the 24-hour time frame, there's not a great deal of, I've made the point already. I think I have actually. Yeah, let me just, it's 2 a.m. here, so rather than me say what I just said 5 times over and go, oh, I'm tired, I'll just ask you if I made sense there. All right. Lol, you're right, literally the opposite right now. Haha, the gun. Lol, cool. I think we're on the same page, right? Cool, nice one. Otherwise had you said no, you didn't, you weren't following it along and stuff like that, I would have happily have chatted about it some more. Yeah, that's what it is to I don't trade the S&P. I don't trade the SPY, right? I don't really. No, I don't. It would be unfair of me to say it. If I ever take a trade on it, it's just it would be unfair of me to say that I trade it. I don't really trade it, right? We've got a V-shape here, a V-shape there, so you've got a couple of V-shapes, this one being more V-like than that one. It is possible to get them on the 24-hour time frame, after a while, but you're really, we're not there yet by any means. At this point here of this sort of V, you're not saying that we've got one. We're in the mode where it's possible, and asking that question, it's that when you say, is it possible to see one? At this point here on this chart, you start saying yes. At this point here in the chart, you start saying yes, etc, etc, etc. At this point in about here, after we gapped right back up the way, then you think, well, yeah, we are, but there's still a lot of trepidation in the air. It's not a done deal yet at that point. At this point over here, you say yes. The gap, you start to say yes, but it's not a done deal at that point. We could, etc, 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 etc. Are we there yet? We're not there yet. And if we did see one, have we gone down that significantly that we'd be able to recover up the way and still not put in another high or have any, or whatever else? Have we got enough to go in terms of this here? We moved up the way 12%, and that's a lot in terms of the SPY to get back up to the highs, and that sort of thing. So we're not. It's not like it's going to. If we get one here, it's not going to make it into any textbooks about what they look like. Okay, even if we get one, it's still not going to make it into the textbook about what they look like. Cool. Yeah, I think that that's the most complete answer that I could possibly give. Nice one. Don't trust the Dixie bump. Eyeballs, says Zoner. My favorite S coin, the Dixie fake pumping. The Dixie. Wait a minute. Wait. What's happening with over here on this one? This is a dollar index, by the way. This is essentially just looking at the value of the dollar. Yeah. What have we got? So it's like class B bullish divergence on the DMI, but you've got it fairly distinctly on the RSI. Nice divergence on that one, coming up past some key areas. We're right here on this structural area for us to be breaking up above, so that's important. That's the 24-hour time frame as well. Stochastics fairly high, but not to say that they couldn't go higher. It would be nice for us to not turn around on stochastics until we've at least taken out one major point of why am I looking at this? Are you wait a minute, sorry, just before I start looking at this, were you guys just taking the piss and am I now looking at something like an idiot that I shouldn't be looking at, or is it worth looking at this? I wonder. You maybe want to know, in the face of the dollar price going up, as this has gone up, this is 24-hour time frame, up in terms of what dollar's worth. Over there on Bitcoin, what we've seen is down in terms of what dollar's worth looking at in terms of Zoner's favorite S coin. So yeah, I think the money printer is jammed now. Dixie pumping. Oh, right. Okay. I see.
Rocky, can I just step in at this point and say that I have got to be up for work in about 6 hours?
Oh, for fuck's sake! I'm sorry, man, for keeping you up. I really do apologize.
So,
I mean,
it's no problem. I've really thoroughly enjoyed being on the show. So thank you so much for letting me be here. I'm sorry that the camera's not been working all the time, but maybe a positive thing for those lot that don't want to look at my ugly mug. But really great time. So thank you, and thank you everybody else for your encouragement. And I bid you all a good night or a good day or good morning wherever you are in the world. And right. I've got to go.
No FOMO here.
Spot on, everybody.
No FOMO on this front here. Don't feel any FOMO, Tony, because I'll be going in a couple of minutes too. Okay, so I want to extend my thank you back, everybody. I'm sure we can say goodnight to Tony here in the chat as well, just as he's cheering out. We've got Zoner saying thank you, Tony, and stuff like that. It's been a pleasure having you here. It's been fantastic. They've contributed to the understanding of, just the general understanding that people have with the stuff that we've been talking about. It's been great as well. And, it's been great doing it. I'll have to get Trace Spotting back on and do the same sort of thing at some point because, obviously I leaned on him last time and just got pissed in the corner as he did the TA for us. But
I love Jamie. He's great. Yeah. If there's ever a yin and yang, then Jamie's your yin and yang.
Yeah, I know. It's fantastic. So, yes, Tony, been a pleasure. Thanks so much. I've really enjoyed the episode here. Hopefully everybody's, really feels positive about stuff. It's been fantastic to see that we have had, of course, concurrent viewers, good numbers there, that people, deciding to stay tuned in. So it's all fantastic. Thanks, man. I hope you don't crash your car on the way. He set up that live. Are we there? Actually, I hope I'm not buffering right now. Well, okay. He set up a chat. Tony set up a chat in the Discord earlier on today at around about 5 o'clock. I tuned in and chatted to Tony at about 5. We had other people coming along like Nav and Ethan, who's still in here as well. So I mean, you've been at it now, Nav and Ethan, for what, about 7 hours as well yourself. But that's 7 hours of talking almost exclusively about TA with my friends. Some of it's been one-on-one, some of it's been out here in public. So yeah, please share the Discord link now, of course, as well. It is fantastic and everything else. It's super wonderful. But I'll check out, by the way, I'm looking forward to checking out your channel again. I mean, I will come and I'll look at your other content that you've got. I'll just use this tab to get to where I'm getting to. So there we go. So we're all good. What was I saying there? Yeah, the Discord link is in the description down below. So I'm just going to get it, but I'm going to get it and pin it on the contents there, or pin it in the chat box so that people know. Yeah, it's a small Discord, relatively speaking. It's not jam-packed full of folk. A lot of the names that you're seeing here are in the Discord, so it's a lovely community, and we are all really friendly almost all the time we are always friendly to each other and stuff, so that's cool. I'll just pin that up the top as well so that people can see it. Yeah, and it'll obviously grow as well, but it's everybody welcome and all that sort of stuff. And try and, I mean, I've been running the Discord now for since the start, since I don't know when. I mean, a couple of months into running the channel, so since March, let's call it, or whatever. And it's not huge, but there's this really good community in there where we all like each other, and it's nice, it's good, it's positive, and I'm going to keep that going as long as I possibly can. But I do appreciate that at some point in the future, you could have so many people join the thing that you lose a part of your ability, your voice in the crowd and all the rest of it. And I want to manage that as well. But the thing is, that's not a worry until way later on down the line. Just trying to decide earlier, how can we keep it so that we've always got that good feeling. And the first time I had a conversation with somebody about how can we keep it always have this good feeling was probably way back in like, you know, April or May, you know, just a couple of months into the, so we started the Discord up, and there was always a good feeling in there when there was just like, you know, just me on my own. It felt great. Lol, kidding. As soon as somebody else joined, it felt good. And then it's always been like that. And so that's one of the things, you know, is that I don't just take it for granted at all. And I always think, how can we keep this positive? How can we always keep it positive? And I discuss it with people as well. So much time goes into doing all of this. That's another one of the reasons why I talk about how I want the channel to pay for itself as well, because the fact of the matter is that I spent 7 hours being community today, and I've not traded at all throughout that entire period. And this is so often. Tomorrow, one of the things that I do, because in January, I think, or for the next week or two or whatever, I'm doing streams Monday, Wednesday and Friday instead of every weekday, because I'm taking Tuesdays and Thursdays to try and, you know, plan out stuff that I can do for like the Patreon and stuff like that, to give extra, you know, to be able to fulfill things, you know, because I get to the point, and also to avoid burnout as well, you know. I think I just heard you joining Collecting History. It's good to have you there, because I heard a bidding noise, and it's probably you arrived in the arrivals lounge, so that's quality. So anyway, I'm always thinking about this. I'm always trying to work towards it. That's why I want to be able to, you know, balance out things and not feel like I'm somehow losing out on you know, earning money by sort of doing work that's got, you know, fantastic spiritual feedback and fantastic spiritual emotional value and community and social value to me, but zero financial value. And of course, without you know, like that, obviously that would become an issue after a certain point in time. And let me just check, in fact, if that was the case. I wonder if I can see that. Was that the case? Thanks. Best community. It's Nav and Ethan, best community. I mean, that's quality. Thanks for grinding it out and being respectful. That's quality. And so many good calls on alts. I mean, that's the thing as well. That's the thing as well. I mean, like... I mean, I could demonstrate it to people. I mean, it's not, of course, it's not. I'm sorry, I don't want to rob your channel again off the thing. I'll just go back to your channel again. It's good to see you're getting some views on this video, though, I suppose, with, you know, lol. I don't do, by the way, I never give people signals. I just don't. I mean, I say that, but I actually, that's not true. I do. What's the appropriate way to say? I never mean to give people signals. Sometimes I do, once or twice. You know, like once when I was drunk, for instance, I did a little bit too much of that. Another time when I was sick, like I was like super sick and I was on doing a stream anyway, I was like, I couldn't think properly, and I just was like, this is where you should put your money in, this is where you take profit, and, you know, or whatever. I tend not to do that though, but sometimes you'll notice I do things, and of course this one is no big deal because it wasn't really a big deal. My thumbnails, I realized, for last week, the other day there or whatever, were super hard to read now. I see them in small format, but the previous video was called something. What was the previous video called? The previous live stream was called "Was 42k the top?" You know, that was on Saturday. But I actually made this thumbnail on Friday, but I couldn't do my stream on Friday because because I got a leak in the bathroom, and that was a bit of a problem. So working back the way, this is Monday, Sunday, Saturday, Friday. So I'd done this. I'd made the thumbnail for that period. You know, we're still up there, and of course we went up towards 31,359. So I had intended on putting like a sort of subtle, not really all that subtle, message out to people, which kind of says short the market without me having to tell them to. But I really backed away from doing that in the summer because I don't want to. When I started off the channel, I was far more concerned about giving people, you know, actual sort of real information in terms of what the price is going to and when it's going to turn around and exactly stuff, you know, which I shouldn't have done, but I did it anyway. And then I withdrew from that, and I feel like that's okay because people now know there's like 2,000 members, and at the point when I kind of said to people, look, I'm going to have to pull back from this, there was over 1,000 members of the channel. Actually, there's about 1,005. I don't really know. Anyway, enough people knew that I was giving out good calls for me to be able to say, look, I'm stopping doing that side of things. But occasionally I would still shove them into the thumbnails and stuff like that as sort of pranks. I mean, there's other ones that we did in the past. Was it not called Avoiding the Crash? Is that what I just wrote in? Is that what I wrote on the? So I'm searching over my video that's called Avoiding the Crash. Can't find it because I must have had that as my thumbnail. So like whatever. There was various ones. That was what I'd called my video for Chainlink, when I did my Chainlink one at the top of the market when it was at $20, and stuff like that. Whatever. I mean, I don't like going on about it loads or whatever, but like over there on the 13th of March, I put on that song, It's a New Day, It's a New Dawn, and I'm feeling good and whatever else, and told people that was this good point in time. Told people about the Head and Shoulders in here in February and the big drop off potential and all that sort of stuff. Told people about the big drop off here in August and everything else and whatever else. And technically as well, I've just went ahead and did that one. Now I know everybody did, but I don't think everybody got all of them the whole way along, which I have on the channel. So I don't really care. I mean, I'm now ambivalent to the point that I try as hard as I can to proactively work against doing that, because that's not what this channel is about at all. This channel isn't about me telling you when to go long and short at all, although too many times it has been. Instead, it's about me giving you the confidence to do this yourself and to become a self-reliant independent trader. That's my real goal. My real goal is to help all of you know that you're on the right path, just to really reinforce that, so that 1,000 good traders will be surrounding me in the future. And that was that. Vet call was quite epic, says TradeSpotting, for instance. Yeah, so there's been quite a few of that sort of thing. Quite a few of them. I'm trying to think of what else there have been. I mean, like, obviously the whole Tezos 196, 222, 152, 175, all of this, or 275, all of those ones, whatever, do they count? I guess so. What else was there? There was a whole bunch of them with Ethereum. Do you remember back in the day as well when I was talking about buying Ethereum at 2 for 1? Does anybody remember the 2 for 1 Ethereums? The 2 for 1s? That was a good laugh, getting it for 2 for 1. I don't know. I mean, there's been tons, right? Tons and tons. But I really want to move away from doing that. Really, that's not what the channel's about. The channel instead is about teaching you, encouraging you more than even teaching you. I'm encouraging you to become an independent self-reliant trader. That's it. It's the number one thing. Resilience is key for us. Is there anything that anybody would like from anything that I've talked about in the show today to explain at all in a more clear format along the lines of what Tony was doing earlier on, rather than the 100 miles an hour stream of consciousness looking at the charts thing? We did V-shaped recoveries, and I really don't want to miss out on any. I mean, if there's anybody who's here and they'd really ask for a coin, then I suppose I could look at one, but it's quite late now and everything else. But if there's anything anybody wants me to explain, that's cool. I'll totally just do it just the now, and then otherwise I'll just kind of wrap up and say cheerio, because it's late. I see Tony's in there giving us his teary laugh face, calling it a night all later, Rocky and friends. See you later, Kevin. Yeah, see you later, Kevin. I hope you're doing well, enjoying all the driving that you've been doing recently as well. Hope it's all going well. And did you? And if you didn't, then remember to stick on the road to hell. We were talking about last time. You probably did. Yeah, cool. Nobody's asking for anything right now, so I feel pretty confident. I think enough time's gone by between the lag on the video that worked. Right. Okay. You know what it's time for? and Tony, if you're just here, you're here for it. I'll say you first. It is a little tradition that we have on the channel where I scroll back up through the last 200 comments and do a reverse roll call. I really appreciate everybody who's here, especially those who stick around to the end and who put comments in the box. I really do appreciate it. So let's get, thanks to you 3000 Train. I'm going to get some sleep. I'm going to get some sleep like right now and watch Field of Dreams tomorrow. Yeah, so thank you every single last one of you. Here's the reverse roll call. You've seen it before if you've tuned in to this channel before, and if you haven't, well then maybe you'll get a wee mention along the way. I really do appreciate every single last one of you spending the time with me to do the TA and being a part of this most wonderful Rocky Outcrop community. I mean, I use my name in that, but it's not like it's, my name's actually a pun, and it's to do with, and you'll have noticed like the charts, you know, Rocky Outcrops and stuff like that. And we're all outcropticians. We all like look for these outcrops in the charts. That's what we all do. It's the most wonderful community. Thank you to every single last one of you outcropticians that's joined in this evening, starting with Tony Wright, who of course was today's guest on the show. Thank you so much, buddy. And thank you to TradeSpotting, who of course is one of the Spanner folk and my brother, and I love him very much, and a great trader and a fantastic friend and all this sort of stuff. And like Tony said earlier on, the yin and yang sort of stuff, it's, you know, very good. He's got his own YouTube channel, and you can absolutely go ahead and check it out as well. He will actually be making paid content for people, not paid content, but proper educational content coming up. I think he'll be publishing that on the likes of Udemy and Skillshare and stuff like that, because, you know, he's definitely very, very good at explaining things in a way that, you know, what Tony did today on the show for me and stuff like that. Anyway, whenever he does them, I'll be shilling them to you all. Then what else? Then Navanethan, I think I'll mention you next at this stage, because of course you've been right here alongside me for the last 7 hours doing this. 7.5 hours doing this. Mental. Zoner, like and subscribe, he says. Well, thank you, Zoner. Thanks for reminding me. Thanks for reminding everybody. I've not really said it that much. If you're here and you're watching now and you haven't hit the like button, would be awesome. I'd really appreciate it. You know, and if you want to subscribe, that's quality. Then 3000 Trin, he's great. I love him. He's got ginger hair, and he's a great guy. And he's a Sagittarius, I think, as well. I think, right? I think you are. I hope I got that one right. I'm a Sagittarius, and I like trading. Anyway, yeah, we also had Collecting History, who turned in perhaps today for the first time and became a subscriber. He's a good one. I'm going to enjoy looking at his history of coin collecting stuff here. You know, there's lots. You know what, by the way, as well, I actually have a coin collection and notes. I say have, but I kind of lose it constantly. I've not really added to it for years, but I started it when I was a kid. Actually, I don't think I've added to it in 30 years. Yeah, I've not added to this coin collection I've had for 30 years, and I only really did it for like a year when I was like 4. Okay, but I have a coin collection, and I guess, you know, at this stage that might even actually now mean something that I've got those coins. There's probably a couple of interesting ones in there, based purely off the fact that, you know, certain coins have gone out of circulation, and there'll be a couple of francs and Deutschmark up the way. I actually have to go quite a distance to find other names other than those funds. Creole dropping the fire icon again, that's quality. We also had Lewis Ellis, that's a good name, and I'm thinking a friend of Tony's as well, and that's good stuff as well. A friend of Tony's is a friend of mine. We had John, by the way, that's Michael John Scott, John here as well. He obviously left earlier on, but he left with a big load of thank yous and you know, spanners and moons and lots of lovely comments. We had this chap earlier on called Yaron Nadell. Now, you know, I did respond to your comment. I didn't hear you responding back to me. I don't know if you're still tuned in or not, but if you are, then, you know, thanks so much for tuning in. Really do appreciate it. We've got AB Lopez, by the way, another shout out to folk. AB Lopez is so to speak is the AB Lopez who's tuned into who's can I go back to YouTube, please? AB Lopez is this guy here, AB Lopez, which is pretty awesome. and I'll not play that in case it's disrupting the thingy. But it's AB Lopez. That's cool. I'm pretty sure. You know, if I get any of this wrong or anything, be sure to correct me on it. But that's cool, cool dude, and really, really, really nice guy. In fact, he's got his own YouTube channel, so I should show that instead. Where's his YouTube channel? Is that the right one, or is it this? I mean, I hope I've not got you wrong. This is not you. That's the wrong AB Lopez, for sure. That one. Where are you? I'm subscribed to you, so why is it not showing up? Anyway, right, okay, that didn't quite work out the way I wanted it to. We've got, who else did we have here? This Artie Pyle, legend, number 2 on the top donators ever. Michael John Scott's number 1. Thunderbug Creative. You know what, Thunderbug Creative? If you got your own YouTube channel as well, I wonder about that one. That's probably worth looking up as well. This reverse roll call is one of the longest lasting ones I've done. Thunderbug, is that going to be you? But it's not, because it's not Thunderbug Creative. Anyway, I wonder. I'll check that out through my back end because it's easier to see people's links at that point. We had who else did we have here? I want to send a out to K-Doc, legend, Scottish legend. Dry, sharp sense of humor, very, very funny, good guy. Really enjoy his presence in every stream. It's always got something funny to say, and it's interesting. Blue Collar Baller became a member in today's video, like as did Thunderbug. Fantastic. Thank you so much for showing your support to the channel, and of course showing your support to other people through the channel. We had WallQ, who came along and felt all apologetic, and I did read this comment at the time, by the way, saying how you haven't watched all the episodes lately, but I don't want to leave out of the value you've generated for me personally. Keep it up. You know, I don't want you to leave either. I totally understand though, that these things last a long time. And we had various other people, but you know what, that's actually so much chat has happened in the last wee while between that sort of group of people that is there, that there aren't very many of the other names showing. So I might have missed a few people here who I really wanted to give shout outs to directly, and I apologize about that. So anyway, I will be reading through this chat hopefully soon. You started as a kid too? Yeah, man, it's cool. Coin Collecting is cool. Yeah, I'm going to look through the comments again tomorrow. I'll watch back through the video, kind of skipping through, just looking at the comments, reading it, and I look forward to doing that. I do that most of the time after doing a live stream, so none of your comments will be missed at any given time. And I really appreciate every single last one of you tuning in today. I am going to tune out now in the next sort of 10 seconds, and I really just appreciate every single last one of you. Thank you for hitting the like button. Thank you for being a part of the community. I will be back again on Wednesday to do another live stream, and yeah, safe trading. Thanks for being a part of the family. See you next